Sir, very happy morning to all. Sir, this video is especially for CA final students, those who are going to write the coming examination. In this video, I am going to just solve some question of ITC, input tax credit, because we all know that that is a very important chapter for examination. In that we will try 5 questions, which is basically all our ICAI study material question. Illustration number 1 is the target. Xenon Private Limited, a registered supplier in Agra, is engaged in the manufacture of taxable goods. Okay, fine. Goods valued 10,50,000 were supplied by the company to Freshbite Private Limited, a registered supplier located in Firozabad, without the cover of an invoice with a fraudulent intent. So without invoice, they have supplied certain goods. Since the company evaded tax by not issuing the invoice for supply, show cause notice was issued by proper officer under section 74, requiring the company to pay tax at 12%, which amount to 1,26,000, which is nothing but 10,50,000 into, sir, 12% comes to 1,26,000. And this is a fraudulent intent, sir. So 73 provisions will not be applicable, 74 provisions will be applicable, and applicable interest and penalty. Sir, the company paid the tax, interest, penalty after the order was passed by the proper officer. So company understood that we have caught, they have paid the tips, tax, interest, penalty, etc. Examine the ITC entitlement of Freshbite Private Limited in respect of tax of rupees 1,26,000 paid by Xenon Private Limited is a question. First, understand the question. Who is the supplier? Xenon Private Limited is the supplier. They are registered in Agra. They are engaged in manufacture of taxable goods. Sir, they have supplied to Freshbite Private Limited, a registered supplier located at Firozabad. Fine, without an invoice. Sir, they are asking for whose ITC? Explain the ITC entitlement of Freshbite Private Limited. Sir, Freshbite have not paid any amount. Who paid? Xenon Private Limited has paid. The company paid the tax, interest and penalty after the order was passed by the proper officer. Sir, we already know in the blocked credit, if you revise the blocked credit, one of the blocked credit is tax paid in consequence of section 74, 129 and 130. Sir, as per section 17 subsection 5, 17 subsection 5 is the blocked credit. Tax paid under section 74, 129 and 130 is not available as ITC. My dear lovable students, in this list 73 is not there. That means if you are paying any tax in accordance with section 73, we are entitled to take ITC. But section 74 is a fraud case. Section 129 is detention of goods and conveyance. And the same way 130 is also similarly to a fraud case. So in these 3 circumstances, you are not entitled for ITC. Further, Rule 36 sub Rule 3 also lay down that tax paid in pursuance of an order where any demand has been confirmed on account of any fraud, willful misrepresentation, misstatement or suppression of facts cannot be availed as ITC by the registered person. So, first, as per section 17 subsection 5, that is talking about the blocked credit. We are having a specific item of blocked credit saying that if you are paying any tax in pursuant section 74, 129, 130, you are not entitled for ITC. This is section based support. Rule based support, as per Rule 36 sub Rule 3, sir, if any demand has been confirmed on account of fraud, willful misstatement or suppression of facts cannot be availed as ITC by the registered person. So conclusion, in the given case, Xenon Private Limited has paid tax in pursuance of an order issued under section 74. Therefore, Freshbite Private Limited cannot avail ITC of such tax. So this question is basically from an ITC related question. That to particular area is blocked credit. So it's not relevant that how many questions you are completing, my dear lovable students. After I done this question, everyone who are listening to this video, go to the blocked credit 17 subsection 5. Out of your 9 blocked credit, spend your 15-20 minutes time there. That is how you have to prepare for the last 1 month, my dear lovable students. Question number 2 is the target. Flamingo Limited is a airlines providing passenger transportation services by air. Fine. The company offers meals of premium quality to passenger on board the aircraft. The value of such meals is compulsory included in the price of the air ticket. Basically, they are talking about the composite and mixed supply. It is a composite supply. The company avails outdoor catering service of Dhanairam Private Limited for providing such meals to its customers. Examine whether Flamingo Limited can avail ITC on such outdoor catering services availed by it. We all know that generally outdoor catering services are blocked credit. But if that outdoor catering services are used to provide any taxable composite or mixed supply, then valid ITC can be taken. So as per section 17 subsection 5 clause 1 subclause B, ITC on supply of inter alia food and beverage outdoor catering is blocked. This is what the generally outdoor catering is blocked. However, ITC in respect of such goods or service or both shall be available where an inward supply of such goods or service or both is used by a registered person for making an outward taxable supply of the same category of goods or service or both, or as an element of taxable composite or mixed supply. That means if that outdoor catering service has been used for the purpose of providing a taxable composite or mixed supply, then ITC on that blocked credit is allowed, because this is a exception to the blocked credit. Now in the given case, Flamingo Limited is availing outdoor catering service to provide outdoor catering meals to passenger on board the aircraft. Since ITC in respect of outdoor catering is available, if the same is used for making an outward taxable supply as an element of taxable composite or mixed supply, so Flamingo Limited can avail ITC on outdoor catering service procured by it, as it will be considered as a supply of an ancillary service to the passenger transportation service supplied by it by principal supply. This is what I said. If you are spend your 15 minutes of time in the blocked credit, then you will be start feeling very confident, my dear lovable students. And these questions are not prepared by myself, which is exactly the illustrations of ICAI study material. I am moving into illustration number 3. Jumbo Sales Private Limited, a supplier of ready-made garments, announced buy one get two free offer on men's t-shirt on Diwali to boost its sales. Such an announcement will come. Buy one get two, buy one get one, like that. You are required to advise the company on the availability of the ITC in respect of inward supply used in relation to such supply. Because we would have purchased the raw material, at that time we would have taken the full ITC. But when you are going to sell that, my dear lovable students, how we are going to sell? We are going to sell on a discount. So this is little important question. It may be appear at first glance that in case of offers like buy one get one free, one item is supplied free of cost without any consideration. This is what general understanding. As per clause A of section 7 subsection 1 clause A, read with clause C thereof, goods or services which are supplied free of cost without consideration shall not be regarded as supply except in case of activity mentioned in schedule 1. We all know that as per section 7 subsection 1 clause A, supply includes all forms of supply of goods or services or both, such as sale, barter, transfer, exchange, license, lease, rental or disposal, made or agreed to be made for a consideration by a person in the course or furtherance of business. But that part is having exception which are covered in section 7 subsection 1 clause C, which is activities specified in schedule 1, made or agreed to be made without a consideration. Only 4 activities are there. So we are having a circular saying, sir, GST dated something but something has clarified that entitlement of ITC in the hands of supplier in respect of sales promotion scheme like buy one get one free. Such promotional offers are not individual supply of free goods, but as a case for 2 or more individual supply where a single price is being charged for the entire supply. It can at best be treated as supplying two goods for the price of one. That means what this circular is clarifying that, for example, if you are selling buy one get one free, actually by paying one consideration, the customer is getting two products. So the consideration, the one consideration is for the two goods or three goods, whatever it may be. So taxability of such supply will depend upon as to whether the supply is a composite supply or mixed supply. You have to confirm whether the supply is a composite supply or mixed supply. And rate of tax shall be determined as per the provisions of section 8. All these are there in the basic section 8. So you have to confirm whether the supply is a composite supply or mixed supply. ITC shall be available to the supplier for the input services and capital goods used in relation to supply of goods or service or both as a part of such offers. Therefore, the given case is not the case of individual supply of free goods. I have not even, sir, what is the understanding? If you look at schedule 1, permanent transfer or disposal of business asset where ITC has been availed. So after taking ITC, I am simply supplying the goods. Here that is not the case. Sir, by getting some consideration, instead of giving one goods, I am giving two goods. That means, sir, that is not a individual supply of free goods, but case of three individual supply where a single price is being charged for the entire supply. Thus, Jumbo Sales Private Limited will be entitled to avail ITC on input services and capital goods used in relation to supply of, sir, T-shirt as a part of such offer, my dear lovable students. So this is a beautiful circular. What this circular basically saying? Sir, by getting one consideration, if you are supplying two or three goods by way of buy one get one or buy two get two, whatever it may be, still you are entitled to claim the full ITC because still you are getting some consideration, and instead of supplying one product, you are supplying two or three products. That's it. So that does not, sir, curtail you to take the ITC, or you are not supposed to take the ITC on a proportionate basis and all. You can take the full ITC. It's a beautiful circular which is favorable to the assessee. Illustration number 4 is the target. A garment factory receives a government order for making uniforms for a commando unit. This supply is exempt from tax under a notification issued under section 11 of the CGST Act. We all know that section 11 is the exemption. The fabric is exclusively procured for such supply, but the thread and lining material for the collars are one which are used for other taxable product of the factory as well. Basically, they are talking about the apportionment, section 17, slowly coming to section 17. The turnover exclusive of taxes of the other product of the factory and exempted uniform in July is 4 crore and 1 crore respectively. This is the turnover split. For my dear lovable students, taxable supply 4 crore and for exempted supply 1 crore. The ITC on thread and lining material procured in July is 5,000 and 15,000 respectively. So 5,000 plus 15,000 comes to, sir, 20,000 is the total common credit. Fine. This common credit has to be apportioned based on the turnover of the taxable and exempted. They themselves straight away given in the question. Calculate the amount of eligible ITC in respect of procurement of thread and lining material. Thread and lining material are inputs which are used for making taxable as well as exempted supply. Therefore, credit on such item will be apportioned. We have to split it. And credit attributable to exempt supply will be reversed in terms of rule number 42. So the hero is rule number 42. As per rule number 42, we have to find out, sir, we have to apportion the common credit into taxable and exempted, and the credit attributable to exempted has to be reversed. Credit attributable to exempt supply is equal to common credit into exempt turnover divided by total turnover. I already said that common credit is 20,000. They themselves straight away given in the question, exempt turnover is 1 crore and total turnover is 5 crore, which is nothing but the taxable turnover plus the exempt turnover. So credit attributable to exempt supply will be 20,000 into 1 by 5 comes to 4,000. We have to put it on dustbin as per rule number 42. Fantastic to the core. So ineligible credit of 4,000 will be reversed in GSTR 3B. And credit of 16,000 will be eligible credit for the month of July. Because out of 16,000, because total credit comes to 20,000. By using that 20,000, I made a taxable supply of 4 crore out of my 5 crore total, which is 4 plus 1 crore. So basically 16,000 is the eligible credit and balance 4,000 rupees is the ineligible credit. So what is the formula? Just for a highlight. Sir, credit attributable to exempt supply is equal to common credit into exempt turnover divided by total turnover. Fantastic to the course, sir. Coming to illustration number 5, and these all are ICAI study material question. When you are listening to this video, I just want your input that whether you are able to appreciate or link to the provisions or not. That you mention as in the comment sections, my dear lovable students. Ceramity Limited as the following unit. There are 3 units are there. Factory in Tumkur, Karnataka, turnover 27 crores in financial year 22-23. Fine. Service center in Hyderabad, Telangana, sir, turnover 1 crore in financial year 22-23. Service center in Chennai, Tamil Nadu, turnover 2 crores in financial year 22-23. Ceramitis Limited's corporate office functions as input service distributor. They are technically asking section 20. It has to distribute ITC of rupees 9 lakh for May 2023. So total ITC to be distributed is 9 lakh. Of this, an invoice of rupees 3 lakh pertaining to technical consultancy for Tumkur unit. That is, out of this 9 lakh, 3 lakh is exclusively for Tumkur unit. So as per the distribution rules, we already know that if any credit is attributable to a particular unit, then that credit should be distributed only to that unit. So this is sir, to that unit itself, this 3 lakhs. So the balance comes to 6 lakh. Sir, 3 lakhs pertain to technical consultancy for Tumkur unit. Explain in brief in what manner should the ITC be distributed is the question. Sir, this has to be distributed only to that particular unit, whereas the 6 lakh has to be distributed based upon the state turnover. So as per rule 39 sub rule D relating to ITC, so that is a relevant rule, rupees 3 lakh is attributable to Tumkur unit and will be transferred to Tumkur unit only because that credit is attributable to that unit, that credit. The balance remaining 6 lakh have to be distributed among Tumkur unit and the service centers in Hyderabad and Chennai in proportion of their turnover in the previous year, that is in 2021, sir, for that previous year, immediately preceding previous year. Tumkur unit will get 27, the balance is 6 lakhs, no, 27 divided by 30. Sir, what is their turnover, sir? In Tumkur unit, factory turnover is, the total turnover comes to 27 plus 1 plus 2, sir, 30. So 27 divided by 30 is for the Tumkur unit. So total 6 lakhs into 27 divided by 30 means 5,40,000 credit has to be distributed to the Tumkur unit. This is general ITC, not the exclusive ITC. Hyderabad service center will get, sir, this is the limit, 1 divided by 30. 1 divided by 30 in the sense means, sir, 9 lakh minus already we have reduced 3 lakhs. So balance is 6 lakhs. 6 lakhs into 1 divided by 30 comes to 20,000 will move to the second unit. And the balance, very simple, 6 lakhs into 2 by 30 is the target. So 40,000 will be distributed to the next unit. Ceramity Limited should issue ISD invoices. We have heard about tax invoices. There is a concept called as ISD invoices from GSTN obtained separately for ISD for distributing ITC as calculated above 2 units. So as per section 20, that input service distributor has to separately issue a ISD invoice, my dear lovable students, saying that this much credit is to this unit, this much credit to this unit. It should clearly indicate in the invoice that same are issued only for the distribution of ITC. In that invoice, that ISD has to mention that that is only for the purpose of distributing the credit. So these are the first 5 questions from the ITC chapter, my dear lovable students. Sir, what I need is you have to revise the provision and link that provisions with the questions. This is the workbook. In this, we are having, sir, ICAI study material questions and the relevant chapters RTP and MTP and also the past examination questions, my dear lovable students. So if you are feeling this as useful, if you want the next 5 more illustrations as the next part, you just comment it below, sir, are you following or not? I just want to know Will this be useful to you? If that is the case, I will be continuing for next 5 more illustrations, my dear lovable students. Revise the provisions attached with the questions. Study very well. Still we are having solid 1 month of time for our examination. I am here to support you, whatever help you need. So, wishing you all the very best. Do well for your exams. Very, very happy morning to all. Sir, we are in the process of doing ITC question. In that we are doing the ICAI study material question. In the last video, I solved first 5 questions. We have taken a break. I believe that you would have revised the provisions of ITC. And in this lecture, I try to complete the next 5 illustrations of ICAI study material. A registered supplier of taxable goods supplied goods value 2,24,000 inclusive of CGST 12,000 and SGST 12,000 to Mohan Limited under forward charge on 15th August, for which tax invoice was also issued on the same date. Generally, a normal supply has been made. The inputs were received by Mohan Limited on 15th of August. On the same date, even the recipient has received the inputs. Mohan Limited availed credit of 24,000 on 20th September by filing form GSTR 3B for the August month. That means, my dear lovable students, in the very next month, that is August, the goods has been received. So, when they furnish the September month, 20th of September, they have taken the ITC. However, Mohan Limited did not make any payment towards such supply along with tax thereon to the supplier. There is no precondition that only when you pay the consideration you are entitled to take the ITC. You can take the ITC, but you are supposed to make the payment within 180 days. Is Mohan Limited eligible to avail ITC on such supply? Yes, absolutely yes. The recipient can take ITC. Discuss ITC provisions if Mohan Limited makes payment of 2,24,000 to supplier only on 18th March of the next calendar year. That means you have to check whether that payment is within 180 days. If that payment is not within 180 days on 181st day, whatever ITC has been availed has to be reversed along with interest. And when they are making actual payment, at that time they can recredit that credit. For that, time limit of 16 subsection 4 will not be applicable. So this is the answer, man. As per section 16, Mohan Limited is eligible to avail ITC of the tax paid on input received by it on the basis of invoice issued by supplier, provided other conditions of availing ITC are fulfilled. This is the basic condition. Payment of value of goods along with tax to the supplier is not a prerequisite at the time of availing credit, but Mohan Limited has to pay the said amount within 180 days from the date of issue of the invoice. Right. If Mohan Limited failed to do so, Mohan Limited shall pay or reverse an amount equal to the ITC availed in respect of such supply, which is ITC of totally 24,000 because 12,000 CGST and 12,000 SGST, proportionate to the amount not paid to the supplier, along with the interest payable thereon under section 50, while furnishing the return in form GSTR 3B for the tax period immediately following the period of 180 days from the date of issue of invoice, will be added to its output tax liability along with the interest. This is as per section 2nd proviso to section 16 subsection 2, read with rule number 37, my dear lovable students. So conclusion, if Mohan Limited makes the payment of 2,24,000 value plus tax to the supplier on 18th March of the next calendar year, that is after the expiry of 180 days from the date of invoice, Mohan Limited can avail the credit of 24,000 while filing form GSTR 3B for the month of March. So what is the one-line summary of the entire discussion? Sir, there is no need that you are supposed to pay the consideration in order to enjoy the ITC. Even if you have not paid consideration plus tax, the recipient can take ITC. But sir, some people will not pay the tax consideration at all to the supplier. So it will tantamount to principle of unjust enrichment. It should not happen. Principle of unjust enrichment should not happen. That's why proviso is saying that, sir, the recipient has to make the payment within 180 days from the supplier's invoice. If yes, no issues, no consequences are there. Otherwise, on 181st day, whatever ITC has been availed, it will become an ineligible ITC. They have to reverse that along with the interest, and they can recredit it at the time of actual payment. along, sir, recredit it without seeing the time limit which are covered under 16 subsection 4. I hope that you are comfortable. Sir, when we are reading these type of questions, we should be able to recollect the provisions. We should be able to attach those provisions with the question. If you are able to, you are in the right track, my dear lovable students. You are going to pass. Revise the provisions properly, then attach with the question. That is how we have to increase our confidence. State the conditions that need to be followed by input service distributor for distribution of credit. What are the conditions to be followed by ISD? Basically section 20 question. Following conditions need to be followed by an input service distributor for distribution of credit. Number 1. Condition number 1. ISD is required to obtain a separate registration for distribution of credit. Yes, sir. Sir, normal registration is different and ISD registration is different. ISD has to take a separate registration for distributing the credit. Credit can be distributed to the recipient of credit against an ISD invoice containing prescribed details. First, separate registration is required. Number 2, ISD invoice is required. That is condition number 2. Condition number 3, amount of the credit distributed shall not exceed the amount of credit available for distribution. For example, 10 lakh rupees is a total amount available. The maximum distribution possible is 10 lakh rupees. They should not distribute more than 10 lakh. The credit relating to an input service must be distributed to the particular recipient to whom that input service is attributable. That means if a particular input service is for unit A, that credit should be distributed only to that unit A. If the input service is attributable to more than one recipient, the relevant ITC is distributed pro rata to such recipient in the ratio of turnover of the recipient in a state or union territory to the aggregate turnover of all the recipient to whom the input service is attributable and which is operational during the current year. That means if the credit is a mixed credit, that means it is between 2 or more unit, then my dear lovable students, you have to distribute that credit to those units based upon the state turnover divided by the aggregate turnover. ITC pertaining to input service which are common for all the unit, if the credit is common for all the unit, is distributed to all recipient in the ratio of turnover in the prescribed manner. That means if the credit is attributable to only one unit, credit should be distributed only to that unit. If credit is attributable to more than one unit, then that credit should be distributed to those unit. If the credit is attributable to all the unit, credit should be distributed to all the unit. ITC available for distribution in a month shall be distributed in the same month and the details thereof shall be furnished in the prescribed form. So that month credit should be distributed that month itself, and both ineligible and eligible ITC are to be distributed separately. So when the ISD is distributing the credit, they should distribute like these are the eligible credit which are entitled for ITC, these are ineligible credit. ITC of CGST, SGST or UTGST and IGST to be distributed separately. It should not be a clump sum of total. They have to sector wise, that is act wise, that is tax wise, they have to distribute. ITC of CGST or SGST or UTGST in respect of recipient located in the same state or union territory is distributed as CGST or SGST or UTGST respectively. For example, head office is situated in Tamil Nadu and the first unit is also situated in Tamil Nadu. CGST will go as CGST, SGST will go as SGST and IGST will go as IGST, whereas ITC of CGST, SGST or UTGST in respect of recipient located in a different state or union territory is distributed as IGST, total of ITC of CGST and SGST or UTGST which were to be distributed to such recipient. That means if the head office is situated in Tamil Nadu, whereas the unit 2 is situated in Kerala, CGST and SGST and IGST will go as IGST because, sir, the recipient is situated in the another state. ITC on account of IGST is to be distributed as IGST. Whoever it may be, wherever it may be, the credit of IGST will go as IGST, my dear lovable students. These are the rules of distribution of credit. Sir, actually by doing this question, section 20 itself is covering. After this question, if you are going and seeing in our material, one question from section 20, how to distribute the credit, section 20 preparation for our examination comes to an end. Happily prepare. Enjoy the preparations. Don't worry about this much is there to complete like that and all, you don't worry. Every day, if you are able to see 10 questions, still 300 questions you can complete, my dear lovable students. Lot of time is there. Don't worry about the time. Worry about what we are doing in that time. Coming to illustration number 8 is the target. With reference to provisions of section 17, what is section 17? Apportionment and blocked credit. Examine the availability of ITC in the following independent cases. So they are having case 1, case 2 and case 3. MBF Limited, an automobile company, has availed works contract service for construction of foundation on which a machinery to be used in the production process is to be mounted permanently. Generally, works contract service are blocked. But if this works contract service has been used for constructing an immobile property, which is a foundation for mounting a machinery, then that is an allowed man. So section 17 subsection 5 clause C blocks input tax credit in respect of works contract service when supplied for construction of immobile property other than plant and machinery, except where it is an input service for further supply of works contract service. Fine. Further, the term plant and machinery means apparatus, equipment, machinery fixed to earth by foundation or structural support that are used for making outward supply of goods or services, and it includes such foundation or structural support, but it excludes land and building or other civil structure, telecommunication towers and pipeline laid down outside the factory premise. This is the definition of the plant and machinery. So plant and generally works contracts are blocked, but if you are getting the works contract for construction of plant and machinery, then that is allowed. This is a definition of plant and machinery excludes all these things. This, in view of the above mentioned provision, ITC is available in respect of works contract service availed by MBF Limited, as the same is used for construction of plant and machinery, which is not blocked under 17 subsection 5 clause C. It is assumed that expenditure incurred towards works contract service is capitalized in the books of accounts of NBF Limited, and no depreciation has been claimed on the tax component, because if you are claiming depreciation on tax component, as per section 16 subsection 3, if you claim depreciation on tax component, there is no ITC, my dear lovable students. I am moving into the second part of the question. Shah and Construction procured cement, paint, iron rods and service of architect and interior decorators for construction of commercial complex for one of its client. That means they have not constructed for their own account. Sir, they are constructing for their client. Basically, they are like CASA grant. Fine, fantastic. So, section 17 subsection 5 clause D blocks ITC on goods and service received by a taxable person for construction of immobile property other than plant and machinery on his own account, including when such goods or services are used in the course or furtherance of business. This ITC on goods and service used in the construction of immobile property is blocked only if those cases where the taxable person construct the immobile property for his what use? Own use. Notwithstanding the fact that the immobile property being constructed will be used in the course or furtherance of his business or not. Here in this case, in the given case, Shah and Construction has used the goods and service for construction of immobile property for some other person. They don't construct for themselves. If you are constructing an immobile property for yourself, then that is only blocked and not on its own account. Hence, ITC in this case is allowed. Basically, they have checked the blocked credit. Third part of the question. ABC Limited availed maintenance and repair services from Jaggi Motors for a truck for transporting its finished goods. We all know that truck is not at all there in the list of the blocked credit. So, case number 3, on a conjoined reading of 17 subsection 5 clause A and clause AB, it can be concluded that ITC is allowed on repair and maintenance service relating to motor vehicle which are eligible for ITC. If the motor vehicle are eligible for ITC, its expenses are eligible for ITC. Sir, if the motor vehicle is blocked, its expenses are also blocked. Further, as per section 17 subsection 5 clause A, ITC is allowed on motor vehicle which are used as transportation of what? Goods. Thus, ITC on maintenance and repair service availed from Jaggi Motors for a truck user for transporting his finished goods is allowed to ABC Limited. I hope that you are getting comfortable. Sir, when we do more and more question and when we revise the provision, the level of control what you are getting will be very level. The thing is, no, you should be able to apply what you studied in the question. It is not only the provision, it is but also the application. Sir, if you don't know the provision at all, that means gone. Sir, but I know the provision, but I am not able to apply in the question means you have to do lot of questions. Automatically after, sir, this is a second lecture. Sir, as compared to first lecture, you will start falling into the topic of what? ITC. I can bet you. That depends upon whether you are revising in between or not. If yes, if you are feeling comfortable, sir, comment your comfortness, my dear lovable students. I'm moving into illustration number 9. On 25th of August, Mrs. Agarwal and Agarwal, a registered supplier of taxable goods located in Bengaluru, Karnataka, purchased one machine for 12,39,000, including IGST fine, from one supplier of Maharashtra, that's why it is IGST, who issued the invoice on the same date. Mrs. Agarwal and Agarwal received the machinery on the same day and availed the ITC for the eligible amount. Mrs. Agarwal and Agarwal used the machine in the process of manufacture of taxable goods. However, Mrs. Agarwal and Agarwal sold this machine to Mr. Suresh Kumar of Andhra Pradesh on 20th August of next year for 7,50,000 excluding IGST. With reference to section 18 subsection 6, determine the amount payable, if any, by Mrs. Agarwal and Agarwal at the time of sale of machine. Applicable rate of IGST is 18%. Brilliant question according to me. Because they purchased a capital goods. They have taken ITC for that capital goods. As we all know that the life of the capital goods, what we assumed in the GST Act is 5 years. Basically, within a period of 5 years, you are not supposed to sell that capital goods because you claimed ITC. That means indirectly you have promised to the government that I will keep this capital goods for a minimum period of 5 years. But if you are selling that within a period of 5 years, my dear lovable students, then provisions of 18 subsection 6 will be applicable. Tell me, provisions of 18 subsection 6 will be applicable. We all know that section 16 is the basic section for ITC. Section 17 is apportionment and block credit, and section 18 is ITC in special cases. This is a special case 18 subsection 6. Fantastic. One of the expected area for examination. As per section 18 subsection 6, if capital goods or plant and machinery on which ITC has been taken are supplied by a registered person, he must pay an amount that is higher of the following. This is the consequences. After claiming ITC, if you are selling that capital goods, then you are supposed to pay this. ITC taken on such goods reduced by 5% per quarter or part thereof. Since it is 5% per quarter, so basically in a year 4 quarters are there, so 5 into 4 comes to 20%. Basically, if you are taking 5 years, this 20 will become 100%. So indirectly they are saying that in the Act, if you are purchased any capital goods and if you have availed ITC, you should hold that capital goods for a minimum period of 5 years. Otherwise, this provision will be applicable. Right. From the date of issue of invoice for such goods or tax on transaction value of such outward supply determined under section 15, whichever is higher. So take how much is the ITC availed minus 5% per quarter or part of the quarter. The balance will be ineligible ITC, or the tax on the transaction value, whichever is higher, is what you are supposed to be paid. Accordingly, the amount payable on supply of machinery by Mrs. Agarwal and Agarwal shall be computed as follows. ITC taken on machinery, sir, they have totally purchased value of 12,39,000 divided by 1118 into 18, 1,89,000. Less ITC credit to be reversed at 5% per quarter or the period of the use of the machine. For the previous year, last year, sir, it is 3 quarters because in the mid of that, in the half of that year only they have purchased. So 1,89,000 is the total ITC. 1,89,000 into 5% per quarter. So basically 9,450 into 3 quarter means 28,350. But in our current year, only 2 quarters they kept. After that, they sold that. So 1,89,000 into 5% into 2 comes to 18,900. So amount required to be paid by adding the reversal amount to the output tax liability is, sir, from this 1,89,000, this is the ITC we have enjoyed, we have taken. This is allowed ITC. So 1,89,000 minus 28,350 minus 18,900 comes to 1,41,750 is the ineligible ITC we have enjoyed, because after taking this much ITC, sir, within this short span of time, we have transferred that ITC. This is one part of the answer. Now coming to what is the transaction value, 7,50,000 is the transaction value into how much percentage? 18%. Comes to how much? 1,35,000. We have to take whichever is what? Higher. Amount payable towards disposal of machine is higher of A or B. Thus, Agarwal and Agarwal is required to pay an amount of 1,41,750 at the time of sale of machine by adding the same to the output tax liability. That means once you purchase a capital goods and once you avail ITC, you are supposed to hold that for a minimum period of 5 years as per 18 subsection 6. In the above solution, amount payable towards disposal of machine has been computed on the basis of Rule 40 sub Rule 2. That is, ITC to be reversed for the period of use of capital goods or machine has been computed 5% for every quarter or part thereof from the date of issue of invoice. However, said amount can also be computed in accordance with Rule 44. This is as per Rule 40 sub Rule 2. You can adopt as per Rule 44 sub Rule 6 also. That is, ITC involved in the remaining useful life in months also of the capital goods or machine can be reversed on proportionate basis, taking the useful life as 5 years. So in two ways you can calculate. They are saying alternative ways, either you can adopt Rule 40 or you can adopt rule number 44. Sir, better to proceed with quarter because per quarter or part of the quarter, that is allowed ITC, because during this period, my dear lovable students, we have used that capital goods. So that amount of ITC can be reduced and balance is the ineligible ITC, or the transaction value, GST on transaction value, whichever is higher, you can take. Fine, fantastic. I hope that you are able to appreciate this question, one of the important question, one of the important information we should carry for our examination. The last question from this slot, illustration number 10. Krishna Motors is a car dealer selling car of an international car company. It also provides maintenance and repair service of cars sold by it, also of other cars. It seeks your advice on the availability of ITC in respect of following expense incurred by during the course of its business operation. Cars purchased from manufacturer for making further supply of such car. 2 of such cars are destroyed in accidents while being used for test drive by potential customer. Number 2, works contract availed for constructing a car parking shed in its premises. Basically, again, they are testing the blocked credit area. As per section 16, subsection 1, every registered person can take credit of input tax charge on any supply of goods or service or both to him, which are used or intended to be used in the course or furtherance of his business. However, 17 subsection 5 specifically certain goods and services on which ITC is not available. In light of the foregoing provisions, availability of ITC in respect of various expenses incurred by Krishna Motors is discussed below. Section 17 subsection 5 clauses specifically block ITC on motor vehicle for transportation of passengers having approved seating capacity of not more than 13 persons. However, same is allowed when the motor vehicle are used inter alia for further supply of such vehicle. This is an exception. Thus, ITC on car purchased from manufacturer for making further supply of such car will be allowed. However, ITC on car fully destroyed in accident will not be allowed as ITC on goods destroyed, for which reason is specifically blocked under 17 subsection 5 clause H. If any goods has been lost or destroyed, you are not entitled to claim the what? ITC. And 17 subsection 5 clause C specifically block ITC on works contract service. When supplied for construction of immobile property, you have to tell me now other than what and what? Plant and machinery. Except where input service for further supply of works contract services. If it is in a similar line of business, then okay, fine. Since the given case, car parking shed is not a plant and machinery, but a civil structure, which has been specifically excluded from the definition of plant and machinery. We already discussed the definition of plant and machinery. And works contract service is not used for further supply of works contract. ITC thereon will not be allowed, is what the discussion is all about. I believe that you would have fallen into the chapter ITC, my dear lovable students. Sir, if you are enjoying, just inform, sir, how you are feeling with regard to the discussion of the second part, the 5 question. If you need, I am ready to do the another 5 more from this chapter. But before that, revise 30 minutes the provisions of ITC, then only you will be able to connect the provisions with the questions. Once you start connecting, you will start enjoy the subject. Once you start enjoy the subject, your confidence will go up. Still we are having sufficient time for examination. Prepare very happily. Prepare it. Don't think and waste your time, my dear lovable students. If you need, we'll be doing question number 11 to 15, and all these questions are ICAI study material question. So this will be very helpful for your examination. I believe if you are enjoying, if you are feeling it as useful, sir, comment it in the comment box below. We'll meet at the appropriate time. Thank you. Bye-bye from here. Sir, very happy morning to all. Sir, we are doing the workbook of ITC input tax credit. We have already done 2 slots actually. First slot we done 5 questions of ICAI study material, and the second slot we have completed the next 5 questions of ICAI study material. In this slot I will try part number 3, 5 question, which is illustration number 11 to illustration number 15. With the help of information given below in respect of a manufacturer for the month of September, compute the ITC to be credited to the electronic credit ledger for the month. Also compute the amount of ITC to be added to the output tax liability for the month of September. Ignore interest if any. Outward supply of taxable goods exclusive of taxes, the value is 70,000. Outward supply of exempted goods is 40,000. Total turnover is 1,10,000. That means this registered person are doing both taxable supply and exempt supply. That's why 70,000, 40,000, total 1,10,000. Other information. There are 3 capital goods they are using. Capital goods used exclusively for taxable outward supply, the GST paid is 2,000. There is no problem at all. So the 100% of the credit can be taken. This 2,000 can drag to the electronic credit ledger. Capital goods used exclusively for exempt outward supply, 1,800. This is exempted and this is exclusive, so we can put it on dustbin. Sir, we will not bring this 1,800 to the electronic credit ledger at all. Capital goods used for both taxable and exempt outward supply, this is called as common credit. We have to apportion the common credit for 60 tax period, and in this particular month, based upon the turnover of taxable vis-a-vis exempted, we have to find out the eligible common credit and ineligible common credit. Subject to the information given above, assuming that all other necessary conditions for availing ITC has been fulfilled, this is one of the basic questions which is available in the ICAI study material. Computation of ITC credit to electronic credit ledger, an amount of ITC to be added to the output tax liability for the month of September. Capital goods used exclusively for taxable supply. Since it is used exclusively for taxable supply, full ITC is available under Rule 43 Sub Rule 1 Clause B. Sir, just take it, rule number 43. As per rule number 43, if any capital goods has been exclusively used for taxable supply, 100% of the ITC is eligible. Capital goods used exclusively for exempt supply. There is a capital goods. With that capital goods, you are exclusively using for exempt supply. That means by using that capital goods, whatever goods you are producing, you are selling without GST, then what department is saying that you are not entitled to claim ITC at all. Since used exclusively for exempt supply, ITC is not available under Rule 43, so the ITC availability is nil. Capital goods used for both taxable and exempt supply, that is called as common credit. Sir, commonly used for taxable and exempt supply, Rule 43 Sub Rule 1 Clause C will be applicable. So 4,200 first we have to take to the electronic credit ledger, and we have to assume that its life is 5 years, and we have to calculate the monthly common credit that has to be apportioned between the taxable and exempted. So the total ITC credited to the electronic credit ledger for the month of September will be 6,200, my dear lovable students, which comprises of 2,000 100% eligible and 4,200 which is common credit. Fine. Now the common credit for the month of September will be total common credit divided by 60 tax period. Why 60 tax period? Because the assumed life of the capital goods is how many years? 5 years. 5 years means every year 12 tax periods are there. So 12 into 5, 60 are there. So 4,200 divided by 60 comes to, sir, 70 rupees is the common credit for a month. Now this 70 has to be apportioned based upon the turnover given, because 70,000 rupees is taxable supply and 40,000 rupees is exempt supply. That's what they have done. Common credit attributable to exempt supply in a month. That is, sir, T into E divided by F, which is nothing but 70 is the per month common credit into 40,000 rupees is the exempt supply out of 1,10,000 rupees, means we will be getting 70 into 40,000 divided by 1,10,000 comes to 25.45 is the common credit attributable to exempt supply. That we have to put it on dustbin. But this amount is already there in the electronic credit ledger because I credited 4,200. This 4,200 is for 60 tax period. That means for one tax period 70 rupees. This 70 rupees include 25.45. So I can claim this 24.45 as my ITC, provided if I am adding amount to be added to the output tax liability for the month of September. This amount, if I am adding to the output tax liability 25.45, then I am entitled to get, my dear lovable students, the entire 70 rupees as ITC for that month. So what are the lessons from this question? If any capital goods exclusively used for taxable outward supply, 100% ITC is available. You can bring that to the electronic credit ledger and you can take that credit in one shot. But if any capital goods used exclusively for exempt supply, please don't even bring to the electronic credit ledger. If the credit is not come to the electronic credit ledger, there is no question of ITC at all. So whether it is in one shot or multiple shot, question does not arise. Capital goods used for both taxable and exempt outward supply, sir, this 100% you have to bring to the electronic credit ledger as common credit, but one shot credit is not available. You have to take the credit over a period of 60 tax period, my dear lovable students. So divided by 60, you will get the common credit for 1 month. I already said the logic why it is 60. Then that 1 month credit has to be apportioned between the taxable and exempted based upon the turnover. So if the turnover has not been given, then we have to take the turnover of the last period. Fine, fantastic to the court. There is one note. Now there is not much relevance for that note. Still I am reading. Prior to the amendment white notification number something bar something of rule number 43 provided that amount of ITC at the beginning of a tax period on all capital goods whose useful life remain during the tax period be denoted as TR and shall be aggregate of TM for all such capital goods. However, clause F has been omitted by the said notification. By putting some notification, one part, clause F of rule has been omitted. Consequently, the term TR become redundant in the formula provided in rule 43 sub rule 1 clause G. However, for the sake of computation of common credit attributable to exempt supply, value of TM has been used here. It may be noted that as per old clause F of rule 43.1, value of TR was aggregate of TM. This not much relevance, as I already told. One part of the rule has been omitted. So this is the way in which we have to calculate. That we have done. I hope that you would have understood that part. Fine, fantastic to the core. I am moving into illustration number 12. Basically the second illustration from this sort. I hope that you are having a clarity on illustration number 11. One line summary we have told already. X, a manufacturer of roofing sheet, is having 1,60,000 as opening balance of ITC for the June month. He provides the following information pertaining to goods and services procured during the month of June. Input tax on raw material is 40,000. He purchased some raw material. On that raw material, 40,000 rupees is the ITC. The raw material is used for making both taxable and exempt supply. That means this is common credit. Input tax on catering services procured from Harvest Caterers in connection with his housewarming ceremony, 10,000 rupees. We all know that only, sir, which has been used for, intended to use for the purpose of business or profession will be entitled for ITC, but this is personal use, not entitled for ITC. Input tax on raw material used exclusively in manufacture of exempt supply of 2 lakh, that is 20,000 rupees. This we have to put it on dustbin, my dear lovable students, because this is exclusively used for exempt supply. Input tax on cosmetic and plastic surgery of manager of the factory is 30,000. We all know that this is blocked credit. Even both the catering service is also blocked credit and this is also blocked credit. Fantastic. Total turnover for the month of June is 60 lakhs exclusive of tax. Compute the ITC credited for the month of June to electronic credit ledger and net GST payable from electronic cash ledger by X for the month of June. Rate of GST is 18%. Ignore CGST, SGST or IGST and provisions of Rule 86B for the sake of simplicity. Subject to the information given above, assuming that all other conditions necessary for availing ITC have been fulfilled, all the purchases are made from the registered supplier. So, this is a normal question, but good question, my dear lovable students. So, I am going to calculate the answer. Computation of ITC available and net GST payable from the electronic cash ledger for the month of June. Now, what is the turnover? 60 lakh rupees is the turnover. On this 60 lakhs, they have to collect 18% GST. That is the output tax collected, correct? So, GST on taxable turnover for the month, 60 lakhs into 18% comes to 10 lakh 80,000 rupees. 60 lakhs into 18%. This is the output tax collected. Against that output tax, we can knock off the ITC. Less ITC available for the month of June month in terms of Rule 42. Opening balance of ITC available in electronic credit ledger, they themselves said that they are having an opening balance of 1,60,000 rupees. Fantastic, sir. Sir, in addition to that, sir, they can claim that particular month's ITC. So that we are going to work out. Computation of ITC out of common credit attributable to exempt supply. Input tax on raw material 40,000 rupees. This is this 40,000 rupees. This is common credit because by using this raw material, they have used for both taxable and exempted, my dear lovable students. So this 40,000. Next one, input tax on catering for housewarming. That's a blocked credit. We can't take it as ITC. Input tax on input contained in exempt supply. That's a blocked credit. Sir, we can't take it as ITC. Input tax on, sir, cosmetic and plastic surgery of CEO of company, this is blocked credit, we can take it as ITC. So, the ITC credited to the electronic credit ledger in terms of Rule 42 in the month of June is 40,000 rupees. So, the common credit is 40,000, we have to divide that 40,000, sir, over a period of 60 tax periods. So, 40,000 divided by 60 means, sir, we are getting 666.67. This is what we have done for capital goods. But this is what inputs, not capital goods. So, we have to find out the ITC attributable towards exempt supply to be reversed. This is the calculation, man, my dear lovable students. Being used in the course or furtherance of business, input tax of raw material is available as ITC and is credited to electronic credit ledger as per 16 subsection 1. Because only if a raw material you are going to use in the course or furtherance of business, you are entitled for ITC. ITC on outdoor catering is blocked in terms of 17 subsection 5. If the same is not used for making an outward supply of outdoor catering or as an element of taxable composite or mixed supply, hence the same is not credited to the electronic credit ledger as per rule number 42. Input tax on input used exclusively making exempt supply is not available as ITC and thus not credited to the electronic credit ledger in terms of rule number 42. ITC on cosmetic and plastic surgery is blocked in terms of 17 subsection 5 if the same are not used for making the same category of outward supply or as an element of taxable composite or mixed supply. Hence the same is not credited to the electronic credit ledger rule number 42. Since there is no input and input services which are used exclusively for effecting taxable supply, the entire ITC credited to the electronic credit ledger is 40,000 will be the common credit we already said. Now, how to deal with that 40,000 is what the matter. ITC attributable towards exempt supply is equal to, we all know that common credit into aggregate value of exempt supply turnover divided by total turnover. Fine. What is the common credit, man? 40,000 rupees is the common credit. 40,000 rupees into what is the exempt turnover divided by total turnover. We have to, sir, read the question. In this question, X, a manufacturer of roofing sheet, is having 1,60,000 as opening balance. Where we have to place this 1,60,000? 1,60,000 has to knock off against the output tax collected. Fine. ITC for the June month. He provides the following information pertaining to the goods. This is for input, this is common credit. This 10,000 put it on dustbin. This 20,000 input tax on raw material exclusively used in the manufacture of exempt supply of 2 lakh is 20,000. This 2 lakh is what the exempt supply. So the turnover of exempt supply has been mentioned like that. So we already having total taxable turnover, look at the wordings, is 60,000. So 60 plus 2 lakh, 62 lakhs is the total turnover. So 40,000 into 2 lakhs divided by 62 lakhs. 40,000 into 2 lakhs divided by 62 lakhs comes to 1290 is the credit attributable to the exempt supply. That's what 1290. So what is the lesson? What we have to take care? Sir, apportionment classified into two categories: apportionment of capital goods and apportionment of input and input services. For apportionment of capital goods, we have to take 5 years. For apportionment of input and input services, sir, 5 years concept will not be applicable. Why? Because plant and machinery will be with us for 5 years. It is having a long-term usage. Whereas input and input services, that particular month's consumption. So 5-year concept will not be applicable. Straight away, we have to apply the turnover. That's why 1290. Now, my dear lovable students, add ITC credited to the electronic credit ledger for the month of June. The entire 40,000 we are entitled to get it as ITC. But inside this ITC, this 40,000 is a common credit. Out of that, some portion is there for exempt supply and some portion is there for taxable supply. So I will bring entire 40,000 to electronic credit ledger and I will take entire 40,000 as ITC also. By disallowing ITC out of common credit attributable to exempt supply 1290. That's what we have calculated, man. So 1,60,000 is opening balance. 40,000 rupees is total ITC, total common credit including ineligible credit. Minus 1290 means the effective ITC will be 1,98,710. So the net GST payable from electronic cash ledger comes to from 10,80,000 reduce the eligible ITC 8,81,290. I hope that you are able to appreciate or understand what we are talking about. Sir, when you do lot of questions before our examination only, we'll be able to place the provisions in the questions. Otherwise, we will know the provisions, my dear lovable students. It will be bit difficult to apply there. So you are having still time for your examination. Sit and do the workbook. That will give you a lot of confidence. Illustration number 13 is the target. Sarani Waivers at Pune, Maharashtra is a registered input service distributor, basically ISD section 20, and intend to distribute ITC for the month of March. Following are the details available for such distribution. Sir, Ganganagar branch, Rajasthan. Turnover of the last quarter is 10 lakh. ITC specifically attributable to the branches IGST 12,000, CGST 3,000, SGST 3,000. They are situated in Rajasthan and Sarani Waivers is in Maharashtra. So everything has to pass on as IGST. Maduragiri branch, Karnataka. Sir, they are in Karnataka. 5 lakh rupees is the turnover, but no exclusive ITC is there. Kosali branch, UP. Turnover 15 lakh rupees. There is no specific exclusive ITCs there. Mumbai branch, Maharashtra. This is Pune branch, Maharashtra. So they are in the same state. 20 lakh rupees. IGST 1,50,000. Pass it on as IGST. CGST 15,000 and SGST 15,000. ITC available on input service used commonly for all the branches is as CGST 60,000, SGST 60,000, IGST 1,20,000. IGST, ITC, IGST of 10,000 pertaining to March last year was inadvertently not distributed. Sir, whether the same can be considered for distribution in March this year is the question. Sir, Maduragiri, Karnataka branch uses input service to manufacture exempt product. Let it be there. Turnover excludes duties and taxes payable to central and state government. Yes, turnover should not include the taxes. Determine the manner of input tax credit distribution. Basically, they have asked a question from section 20 input service distributor. Sir, listen very carefully because this is a good area for examination. As per section 20, read with rule number 39. Total GST credit, that is CGST, SGST, IGST of rupees 18,000, specifically attributable to Ganganagar branch, Rajasthan, will be distributed as IGST credit of 18,000 only to Ganganagar branch, Rajasthan, since recipient and ISD are located in different state. This is the, sir, answer for Ganganagar branch, Rajasthan. What it is? Sir, the ISD is situated in Pune, Maharashtra, whereas a branch is situated in Rajasthan. So both these guys are situated in two different states. So IGST 12,000, CGST 3,000, SGST 3,000. So 12 plus 3 15 plus 3 18, that 18,000 will be distributed as IGST, my dear lovable students. Fine. Now number 2, IGST credit of 1,50,000, CGST credit of 15,000 and SGST credit of 15,000 specifically attributable to Mumbai branch Maharashtra will be distributed as IGST credit of 1,50,000, CGST credit of 15,000 and SGST credit of 15,000 only to Mumbai branch, because that credit is attributable only to that branch Maharashtra, since recipient is located in the same state in which the ISD is located. Because sir, the ISD is located in Maharashtra and also the branch is located in Maharashtra. So ISD will be distributed as, sir, IGST will be distributed as IGST, SGST will be distributed as SGST and CGST will be distributed as CGST. Fantastic, sir. Now we have to come to the common credit. CGST credit of 60,000, SGST credit of 60,000 and IGST credit of 1,20,000 has to be distributed among the 3 branches, because that service, input service is attributable to all the branch. And Mumbai branch Maharashtra in proportion of their turnover of the last quarter. Sir, Ganganadar branch Rajasthan will get 48,000. How it has to be get it as 48,000? Now 60,000 is the CGST credit. Then SGST credit is also 60,000, my dear lovable students, and IGST credit is 1,20,000. So 60 plus 60, 1,20,000, 1,20,000 plus 1,20,000 comes to 2,40,000 rupees is the total amount to be distributed. In that the first one, Ganganadar branch, the Ganganadar branch is the total turnover we have to calculate here, which is 10 lakhs plus 5 lakh 15 lakhs, 15 plus 15 30 lakhs, 30 plus 20 is 50 lakh rupees is the total turnover. So basically 10 by 50. So 2,40,000 into 10 by 50 comes to 48,000 rupees is the credit attributable to the first branch. So 2,40,000 into 10 lakhs divided by 50 lakhs as IGST credit. Fine, fantastic to the core. Now Madhuragiri branch Karnataka will get, sir, how much is the total credit? 2,40,000. 2,40,000 into, sir, Madhuragiri, the next person, the turnover is 5 lakhs. So 5 lakhs divided by 50 lakhs. So basically 10%, 24,000 rupees they will get as IGST credit. Why IGST credit? Because both the guys are situated in 2 different states. The credit attributable to recipient is distributed even if such recipient is making exam supply. That is not the headache of the ISD. Even the recipient is, sir, engaged in exam supply, credit will be distributed, but they can't avail that credit. Fine. Kosala branch UP will get 72,000. How it is 72,000? Sir, 2,40,000 is the total credit into 15 lakhs divided by 50 lakhs as IGST credit, because they are situated in Uttar Pradesh. Mumbai branch Maharashtra, sir, both ISD and the branch are situated in the same state. So CGST has to go as CGST, SGST has to go as SGST and IGST has to go as IGST. So 60,000 is the CGST into 20 lakhs divided by 50 lakhs as CGST credit. 60,000 into 20 lakhs divided by 50 lakhs as SGST credit. 1,20,000 into 20 lakhs divided by 50 lakhs as IGST credit. And ITC of 10,000 of March, that is last year, cannot be distributed in March this year, as ITC available for distribution in a month is to be distributed in the same month. This is our rules of distribution. Rules of distribution. That particular month's ITC has to be distributed in that particular month itself. I cannot carry forward the credit and I cannot distribute. So that has to be put it on dustbin. I hope that you are able to appreciate or understand this in a very, very better way. One of the expected area for examination, sir, section 20, because it is not there in Inter, which is there exclusively in CA final. Don't take a chance, my dear lovable students. I believe that you are getting good grip over the, sir, input tax credit question. This is slot number 3. I hope that you would have already done slot 1 and slot 2. If you are enjoying, sir, inform your enjoyment by way of comments. I am moving into illustration number 14. George Private Limited, a registered supplier of Kerala, goods at Kerala, who pays GST under the regular scheme, has made the following transaction exclusive of tax during a tax period. 5 lakh purchases made from registered person in New Delhi. Sales 10 lakh sales made to registered person in New Delhi because it's an intra-state supply. 2,50,000 purchase made from registered person in Trivandrum, sir, Kerala. 8 lakh sale made to registered person in Trivandrum. These are the tax rate: IGST 18%, CGST 9%, SGST 9%. Company has complied with all the conditions for availing ITC. Following further information regarding various opening balance available with it for the tax period is provided by the company: CGST 50,000, SGST 30,000, IGST 1 lakh. Compute the net CGST, SGST and IGST payable from the electronic cash ledger by George Private Limited for the tax period, as also ITC to be carried forward to the next period, if any, is what, my dear lovable students. It's a straightforward, simple question. Computation of GST payable. So, computation of net CGST, SGST and IGST payable from the electronic cash ledger by George Private Limited. First one, sales made outside Kerala, New Delhi. Here, you look at here. Purchases made from registered person in New Delhi. This guy is registered supplier of goods at Kerala. So, the supplier is situated in Kerala. He purchased from Delhi and is made the sales to Delhi person. So, interstate inward supply and interstate outward supply. So, he is supposed to collect IGST. The value is, sales value is 10 lakh. So, the amount is 10 lakh. IGST has to be collected at the rate of 18%. Fantastic to the core. Now, sales made in Trivandrum, the second sales, being intrastate sale, same is liable to CGST and SGST. The value is 8 lakh, CGST at 9%, SGST at 9%. So, the total output tax collected comes to 72,000 of CGST and 72,000 of SGST and 1,80,000 of IGST, my dear lovable students. Less ITC available during the tax period for set off. What are the ITC available? I have made purchases. 5 lakh rupees I have made purchases from New Delhi. So, IGST I would have paid. IGST 18% I would have paid. So, 5 lakh into 18% comes to, sir, 90,000 rupees is the IGST I would have paid. This purchase made from Trivandrum, Kerala. So, CGST and SGST only. So, 2,50,000 which is CGST into 9% and 2,50,000 into again 9%. So, 2,50,000 into 9% comes to 22,500 and 22,500. Fantastic to the core. So, total ITC available during the tax period for set off. Refer working note below. We are having working note. Just we put the table. Sir, ITC available during the tax period. Opening balance. They themselves given CGST 50,000, SGST 30,000, IGST 1 lakh. Purchases from New Delhi being interstate purchases, IGST would have been paid, my dear lovable students. So, the amount is 5 lakh. So, 90,000 rupees would have been paid. Purchases from Trivandrum, just now we calculated CGST 22,500, sir, SGST 22,500, no IGST. So, 72,500, 52,500 and 1,90,000. Come here. Sir, just 72,000. We are having IGST, always we are having a rule that IGST credit should be exhausted. So, first I am taking 1,90,000. That 1,90,000 I am set off against the IGST payable. Out of 1,90,000, 1,80,000 gone, still 10,000 IGST credit is there. That I can set off against either CGST or SGST in any manner or any proportion. So, this 10,000 I have set off. IGST credit I knock it off. Then I am having CGST and SGST credit 52,500 CGST, SGST credit and 72,500. Here only 72,000 is there. So, against that 72,000, 72,500 minus 72,000, still balance 500 is there. That has to be carried forward. Sir, I will carry forward for future. But here out of 72,000, already 10,000 I have knocked it off. Remaining only 62,000 is there. From that 62,000, sir, I am having credit of only 52,500. So, 62,000 minus 52,500 comes to 9,500 is the net tax liability to be paid in cash. So, I will pay the SGST of 9,500. 500 rupees of CGST has to be carried forward. No carry forward, no payable for IGST. This is a very normal question, man. Since sufficient balance of ITC of CGST is available for CGST liability and cross utilization of ITC of CGST and SGST is not allowed. ITC of IGST has been used to pay SGST. After paying IGST liability as credit of CGST and SGST can be utilized. Only after IGST credit has been fully utilized. Pakka question, sir. Very basic question at inter level. Shall we move into the last question from this slot? Illustration number 15. Illustration number 15. Fine. Quanto Enterprises is not required to register under CGST Act. However, it applied for voluntary registration on 17th September. Fine. Registration certificate has been granted to the firm on 25th September. This is my relevant date. Whatever stock details available on 24th September will be taken into account. The CGST and SGST liability of the firm for the month of September is 24,000 each. They themselves given. The firm is not engaged in making any interstate outward supply. You are not supposed to do any interstate outward supply. If you do any interstate outward supply, then you will fall under section 24 compulsory registration. Quanto Enterprises provide the following information regarding the capital goods and input held in stock as on 24th September, sir, which is the just one day before the registration. Input procured on 2nd September lying in stock, sir, CGST at 6%, 4,500 eligible. Input received on 21st July contained in semi-finished goods, sir, as I all know that July, it's no problem, allowed within time limit, CGST 6%, SGST 6%. Value of input contained in finished goods held in stock rupees 2 lakh. Such inputs were procured on 19th September last year. Sir, invoice for the goods was also issued on the same date, IGST 18%. We have to see the cutoff date. Cutoff date is 24th September, but this is 19th September, which is before the time period. Input valued at 50,000 procured on 13th September lying in stock, IGST 18%. Capital good procured on 12th September. Sir, with regard to normal registration and voluntary registration, sir, we are entitled to get ITC only on input and not on capital goods. We have already done the sum in the class. You are required to compute the net GST payable from electronic cash ledger by Quanto Enterprises for the month of September, assuming that conditions for availing ITC are fulfilled, subject to information given above. You are also required to mention reason for treating of all above items. So, computation of net GST payable. First, output tax liability for the month, they themselves given 24,000 CGST and 24,000 SGST. Fine. Now, we are going to have the credit. Credit is based upon the time period. Credit of IGST is first utilized towards payment of IGST and thereafter for CGST and SGST in any order, any proportion. Credit of CGST and SGST can be utilized only after IGST credit has been fully utilized. This is as per Rule 88A, read with section 49 subsection 5, 49A and 49B. Every section and rule we have discussed in the class. Since Quanto Enterprises does not make any interstate supply, in the answer, the entire credit of IGST has been utilized towards payment of CGST. Credit of IGST can also be utilized against SGST liability or against both CGST and SGST in any proportion, and thus the final answer will change accordingly because it is our wish, our ishtam, in any manner, any proportion. As per section 18 subsection 1 clause B, this is ITC in special case. A person who has taken voluntary registration is entitled to take credit of input tax in respect of input held in stock and input contained in semi-finished or finished goods held in stock on the first day immediately preceding the date of grant of registration. However, he cannot take ITC in respect of capital goods held on the day immediately preceding the date of grant of registration, as we already know that, sir, the ITC only available for the input and for capital goods ITC is not available. ITC on input need to be availed within 1 year from the date of issue of invoice by the supplier. As per 18 subsection 2, the time limit is 1 year is the time limit. In this case, since Quanto Enterprise has granted voluntary registration on 25th September, we have to see 1 day before, which is 24th September. It will be entitled to ITC on input held in stock and input contained in semi-finished goods or finished goods held in stock on 24th September. In view of these set provisions, eligible ITC for Quanto Enterprises is computed as below: CGST at 9%, SGST at 9% and IGST at 18%. Input held in stock since 2nd September, no problem at all, ITC is eligible. Input received on 21st July, even that is also within 1 year, so ITC eligible. But input contained in finished goods held in stock, which were procured on 19th September last year, which is before 24th of September, invoice issued prior to 1 year, hence ITC cannot be availed, my dear lovable students. Fine. Input held in stock since 13th September, fine. Sir, 13th September, ITC is eligible. Capital goods, anyway, capital goods, sir, we are not entitled. So, this is the total ITC eligible, my dear lovable students. I already have 12,000, 12,000 and 9,000. So, 12,000, 12,000 and 9,000. Fine, sir. Already we are having, they have given the output tax liability. Now, I will take first the, sir, 9,000 rupees IGST credit. Since there is no IGST payable, I will knock off the entire 9,000 against the CGST. So, the IGST has been exhausted. This I have put it on dustbin. Now, I am having 12,000, 12,000 credit. The balance will be, sir, 12,000 SGST, I can knock it off, and 12,000 SGST payable, there is no doubt about it. Here 12,000 is there. From 24,000, I knock it off 9,000. So from 24,000, if I reduce 9,000, I will still have 15,000. But I am having credit of only 12,000. So if I knock it off, 3,000 rupees is the payable. So 3,000 rupees net GST payable from electronic cash ledger. Sir, this area is very important for examination. Section 18 ITC in special cases. So in this slot, we have done, my dear lovable students, question number 11, 12, 13, 14, 15. I believe that you are getting a confidence in ITC. If you wish, if you want, sir, just inform me. In the coming slot, we'll be doing illustration number 16 to illustration number 20. All are big illustrations, sir, which having lot of discussion. It carry lot of discussion, my dear lovable students. If you want, we will be discussing these illustrations also. Inform me in your, sir, comments, and I hope that you are enjoying the workbook series question doing. If yes, inform me through the comments. I am wishing you all the very best. Study very happily. Very important chapter for examination ITC. That's what I am doing here. We'll meet at the appropriate time. Thank you. Bye-bye from me. Sir, very happy morning to all.
Happy morning, sir.
Sir, we are doing the workbook series of ITC. In that, 3 parts has been completed. Part number 1, 5 question. Part number 2, 5 question. Part number 3, 5 question. This is, sir, part number 4, which is from illustration number 16 to illustration number 20. In that, we are going to do illustration number 16. It's a beautiful question which is there in the ICAI study material. B&D Company, a partnership firm registered in Nagpur, Maharashtra, is a wholesaler of taxable product P and product Q exempted by way of notification. So they are dealing with 2 products, my dear lovable students. Product P, which is taxable, and product Q, which is exempted. The firm supplies these products only in the eastern parts of Maharashtra. All the procurements, both goods and services of the firm, are from the suppliers registered under regular scheme in the state of Maharashtra. That means they are paying GST when they are purchasing, is what they are trying to say. The firm pays tax under composition scheme, but this company, our firm, is paying tax under composition scheme. Since they are traveling through composition route, section 10 route, whatever GST they are paying cannot be claimed as ITC. And as per section 10 subsection 4, no output tax and no input tax. BDN company has furnished the following details with respect to its turnover exclusive of taxes and stock exclusive of taxes. These are the turnover details and these are the stock details. With regard to turnover details, product P, you tell me, is the product P taxable or exempted?
Taxable.
Taxable. Product Q?
Exempted.
Turnover for the quarter ended 30th June, that means April, May, June, first quarter 60 lakh and 17 lakh 65,000. Whereas turnover for the quarter ended 30th September, that is July, August, September, the second quarter 50 lakhs and 17 lakhs. If you add, you will get the aggregate turnover. With regard to the stock details, on the first quarter ending 25 lakhs and 10 lakh and 10 lakhs and 2 lakh, stock as on 1st October, 31st October, 3,60,000 and 1,20,000. Actually, stock details for the first quarter ended has been given, stock details for the second quarter ended has been given, and stock details for the third quarter first month end has been given. The entire stock of product P and Q available with the firm as on 30th September is purchased during the said half year except a consignment of product P valuing 3 lakh, which was purchased in April month of the preceding financial year. We all know that with regard to the time limit for claiming ITC as per 18 subsection 2, maximum 1 year, stock can be taken as ITC. The said stock could not be sold during the month of October. That means it is still there in the stock. That item is still there in the stock. In the current financial year, in the month of October, no purchases were made and product was sold with a gross profit of 20% of sales exclusive of taxes, the extract of the only bill book maintained by firm show the following details. This is bill number 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Right, with regard to 1st October, sir, product P 2,03,000, total 2,03,000, like that sales details has been given. All the above amounts are exclusive of taxes wherever applicable. Compute the ITC to be credited to the electronic credit ledger of B and D company when it exit composite scheme and become liable to pay tax under the regular scheme. In accordance with the provisions of 18 subsection 1 clause C, make suitable assumptions wherever required. Stock is valued at cost price. According to me, what a question is this? Brilliant, fantastic, outstanding question. Because now this is a range of CA final level, my dear lovable students. Whatever provisions you have studied should be able to appreciate or understand in a question. You should be able to apply that in the question. How to apply that? We already studied that as per section 10 with regard to the composition levy. Sir, if the aggregate turnover in the immediately preceding previous year does not exceed 1.5 crores or 75 lakhs as the case may be, you are entitled to travel through the composition levy. Whereas in the current previous year, if the aggregate turnover, my dear lovable students, exceeds 1.5 crores or 75 lakhs as that day, you have to get out of the composition levy as per section 10 subsection 3. And from that day onwards, you are supposed to travel through the normal route, which is section 9 route. So we have to calculate the aggregate turnover in the current previous year, right? Aggregate turnover in the current previous year. Sir, you just take the calculator, sir. For product P, 60 lakhs plus 50 lakhs, total comes to 1 crore, 1 crore 10 lakhs. Sir, 17 lakhs 65,000 plus 17 lakhs comes to 34 lakhs 65,000. So you tell me, sir, 1 crore 10 lakhs plus, sir, 34 lakhs 65,000 comes to 1 crore 44 lakhs 65,000 is the aggregate turnover till the second quarter. That means till the second quarter, they are entitled to travel through the composition levy because the aggregate turnover does not exceed the threshold limit. Sir, then again they have given the sales details, again 2,03,000. So 1 crore 44 lakh 65,000 plus 2,03,000 comes to how much? 1 crore 46 lakh 68,000 plus 1 lakh 38,250 comes to 1 crore 48 lakh 6,250 plus 1 lakh 6,250 comes to 1 crore 49 lakhs 12,500 plus 92,500 comes to 1 crore. So this is a hero, man. 3rd October is a hero. Because on 3rd October, the aggregate turnover has exceeded 1.5 crores. That day, you have to, sir, come out of the composition levy. The problem here is what they have done in this question. They have given an accounting question, FR question basically. Because they have given the stock of 30th September. After 30th September, they have given the stock details of 31st of October. I don't want the stock details of 31st of October. I want the stock details just one day preceding the effective day. That means 3rd October, just one day is 2nd October. So, I have to calculate this stock on 30th of September. If there is any purchases I have made, I have to add. If there is any sales I have made, I have to reduce. So for that only they have given the sales. But sales include profit. For that only they have given the profit margin, my dear lovable students, which is 20% on sales. So by that I can find out the cost. So to the stock available, I have to reduce the only cost. Then I will get the stock as on the relevant date. In that stock as on the relevant date, I have to see the age of the stock. Out of that 3 lakh rupees stock is, sir, old stock which is more than 1 year back. That is not entitled for ITC. That has to be removed. Then I will get the eligible stock which are entitled for ITC. On that I can claim ITC is what the provisions of 18 subsection 1 clause C is all about. Now look at the notes. As per section 10.3, we all know that 10 subsection 3 is option lapses. Read with notification of something bar something, dated something bar something, option availed by a registered person to pay tax under composition scheme shall lapse with effect from the day on which his aggregate turnover during a financial year exceeds 1.5 crores or 75 lakhs in case of special category states except Assam, Himachal Pradesh and Jammu and Kashmir. Because we all know that there are 8 special category states are there. Arunachal Pradesh, Assam, Manipur, Meghalaya, Mizoram, Sikkim, Nagaland, Tripura, Bhagdodara, Uttarakhand. So, this is a provision as per 10 subsection 3, fine, fantastic to the core. As per section 2 subsection 6, we all know what is the definition of the aggregate turnover. Aggregate turnover means the aggregate value of all taxable supply excluding the value of inward supply on which tax is payable by a person on what charge basis? Then exempt supply, export of goods or service or both an interstate supply of persons having the same PAN to be computed on all India basis but exclude CGST, SGST, UTGST, IGST and GST compensation cess. Pakka? Sir, in the given case, the firm is registered under what scheme? In the state of Maharashtra. Aggregate turnover of the firm exceeds 1.5 crores on 3rd October. Even we also got on 3rd October. On 3rd October, the aggregate turnover exceeds 1.5 crores. That is aggregate of both taxable and exempt turnover from 1st April to 3rd October is, sir, 1 crore 50 lakh 5,000. Which is nothing but 1 crore 44 lakh 65,000, which is the turnover of the first quarter plus the second quarter, plus the day 1 sale, plus day 2 sale, plus day 3 sale, plus day 4 sales. Thus the firm will pay tax under the regular scheme, that is section 9 route from 3rd October. Now coming to the provision as per section 18 subsection 1 clause C, read with rule number 40, where any registered person ceases to pay tax under section what? He shall be entitled to take credit of input tax in respect of input held in stock, input contained in semi-finished goods or finished goods held in stock and also in what goods? As per 18 subsection 1 clause A, capital goods is not allowed. As per 18 subsection 1 clause B, capital goods is not allowed. Whereas as per 18 subsection 1 clause C, capital goods is allowed. Comfortable? On the day immediately preceding the day from which he become liable to pay tax under section what? 9. Further, ITC on supply of input and capital goods shall not be available after the expiry of 1 year from the date of issue of tax invoice as per 18 subsection 2 time limit. With all this provision, we are going to apply what we have discussed. In the light of the above mentioned provision, ITC credited to the electronic credit ledger of BD on company input held on 2nd October. What is the relevant date? 3rd October. Because 3rd October is the date on which the aggregate turnover exceeds the threshold limit. So we have to see 1 day before the relevant date, which is 2nd October. Will be computed as under, sir, on that 30th September, sir, they have given the stock. Actually, the problem in the question is, there are 2 products are there. Product what and what? P and Q. Product P is taxable and product Q is what? Exempted. Since the product Q is exempted, my dear lovable students, we would not pay any tax for product Q. But for product P, we would have paid the tax on 30th of September. What is the stock available of product P? 10 lakhs is the stock available. So stock of taxable input, because in question they gave 2 input. One is taxable input and on 30th September. Since no tax is paid on exempt purchases, there does not arise any question of availing ITC on the same at all, because the item is an exempted item. You would have not paid what? Tax at all. Then what? Where is the question of taking ITC? Because one product is taxable and other product is exempted. Hence stock of any taxable input is considered is how much lakh? 10 lakhs. That is a stock available as on 30th September. But I don't want the stock as on 30th September. I want the stock as on 2nd October. Right? Then my dear lovable students, I have to add purchases. You just look at the list of October. October they have given only sales. No purchases has been made. Sir, no purchases were made. Specifically they said. So during that 1 or 2 or 3 days, no purchases has been made. That I have not said. It is given in the question. So add purchases will become 0, my dear lovable students. Less cost of taxable goods sold. Cost of taxable, not the sales value. Don't reduce the sales value, reduce the cost of taxable goods sold. Sir, during that 1 or 2 or 3 days, sir, look at the table, my dear lovable students. For P, 2 lakh rupees is the sales value. For Sir P, the second day, 1,33,000 is the sales value. 67,000 is that sales value. But this has been sold on 3rd October. I need this sales value, which is 2 lakhs plus 1,33,000 plus 67,000 comes to 4 lakh. Into how much percentage? 80 percentage. 4 lakh into 80 percentage comes to 3,20,000 rupees is the cost of goods sold. So, by the end of the second quarter, we were having 10 lakh rupees. Out of that, 3,20,000 has gone out. So, how much balance will be there? 6,80,000. This is the stock as on 2nd October. Because this was 10 lakh rupees was the stock as on 30th September, my dear lovable students. From this 10 lakh, actually 3,20,000 rupees stock has gone out. So how much balance will be there? Inside this 6,80,000, there is a value of how much lakh? 3 lakh old stock. That has to be removed. So 6,80,000 minus 3 lakhs comes to 3,80,000 is the stock of input on which ITC can be claimed. What a question, brilliant question. In examination and all, if this type of question has to be clicked, means you have to solve this type of question. Fine. On this stock of input on which ITC can be claimed, ITC of CGST at 9% comes to 34,200. ITC of SGST at 9% comes to 34,200. Since all purchases are intrastate, because it has been specifically mentioned in the question, because they specifically said that all purchases they are making from the state of what? Maharashtra. Hello, sir. Yes, sir. Here, the firm supplies these goods, products only in the eastern part of Maharashtra. All the procurements, both goods and service of the firm are from the supplier registered under the regular scheme in the state of. That means all the purchases are what purchases, man? Intra-state purchases, right? So that's why CGST and SGST at the rate of 9%, since all purchases are intra-state and from the suppliers registered under the regular scheme. So what is the summary, one-line summary of the entire discussion of this question? Sir, if the aggregate turnover in the immediately preceding previous year does not exceed 1.5 crores or 75 lakhs as the case may be, I am entitled to travel through the composition levy. Once I travel through the composition levy during the current year, sir, my aggregate turnover should not exceed 1.5 crores or 75 lakhs as the, once it crosses 1.5 crores or 75 lakhs as the case may be, that day you are supposed to go out of the composition levy and you are supposed to travel through section 9 route, which is a normal route. Then you have to see the relevant date just one day before the relevant date, my dear lovable students. Whatever stock available on input and also on capital goods, you are entitled to claim it as ITC. That's what the question. But they have applied in a very different way. They have given stock as on 30th of September, but that relevant date is happening on 2nd of October. That stock details has not been given. Generally, what we are supposed to take is we have to take the stock of 30th of September. We have to add the purchases less the cost of goods sold. We will get the stock value. We have to analyze the aging of the stock value. Inside that stock, if more than 1 year stock is that, put it on dustbin. The balance, the remaining stock are entitled for ITC. Comfortable? This is what question number 16, question number 1 of sir 5 questions, my dear lovable students. We will be moving into question number 2, which is question number 17. Yes, fine. We are moving into the question number 2, which is illustration number 17. XYZ Private Limited is a manufacturing company registered under GST in the state of Uttar Pradesh. It manufactures 2 products, alpha and beta, and 1 exempted product, gamma. So if you look at the story, product classified into 3 categories. Number 1, alpha, beta, gamma. alpha is taxable, beta is taxable, gamma is exempted. Super, sir. On 1st October, while product beta got exempted through an exemption notification. Oh my God. Sir, beta was taxable, but by putting an exemption notification under section 11, this has become exempted. Then you have to face the consequences. Government will do something. They will make it taxable, exempted, exempted, taxable. Whatever they want, they will do. But because of that, you have to face the consequences. What consequences? While product beta got exempted through an exemption notification, exemption available on gamma got withdrawn on the same date. That means gamma become taxable. So gamma was earlier exempted. This has become taxable. Fantastic to the core. So this is the change in the taxability. The turnover exclusive of taxes of alpha, beta and gamma in the month of October was 9 lakh, 10 lakh and 6 lakh respectively. This is the turnover details. XYZ Private Limited has furnished the following details. Asset-wise details has been given. Machinery U purchased on 1st October for being used in manufacture of all the three products. Sir, the machinery value is 2 lakh and this 36,000 rupees. Now, what is the final position of the taxability? Sir, the final position of the taxability is this is now taxable, this is now exempted and this is now taxable. Correct. So, since one machinery has been purchased which is going to be manufactured all the three products, my dear lovable students, this will become common credit. This 36,000 will become, once it become common credit, we have to bring that ITC, 100% of the ITC to the electronic credit ledger and we have to treat the life of the asset as 5 years. So divided by 60 and we have to apportion based upon the turnover. For that only turnover details of the various products has been given. Fine, fantastic to the core. So this 36,000 will come and sit in the electronic machinery V, the next machinery, purchased on 1st October for being used in manufacturing product alpha and gamma. What is the taxability? One is taxable, other is exempted. So again it is a what credit? Common credit. So this is common credit and this is also common credit. So even this amount of 18,000 will also come and sit in the electronic what ledger? Credit ledger. And you have to treat the life of that asset is also 5 years divided by 60 and you have to apportion based upon the turnover. Coming to the next machinery, machinery W. Machinery W purchased on 1st October for being exclusively used in manufacturing product beta. What is the status of beta? Exempted. That means don't bring this ITC to the electronic credit ledger at all. This amount should not come to the electronic credit ledger. Machinery Y purchased on 1st October 4 years ago, still 1 year is pending, for being exclusively used in manufacturing the product beta. So beta, sir, 4 years ago it was exempted. It was taxable. Now it become exempted. So at that time, since it was taxable, sir, you would have brought that ITC to the electronic what ledger? Credit ledger. Now recredit concept is not possible. Recredit concept is not possible. That amount again we can't bring to the electronic credit ledger. But sir, for that item, my dear lovable students, now you have to treat that as common credit manually. Tell me. Common credit manually. So this amount, that means ineligible credit you have taken 72,000 because you give a promise to the government that I will use this plant and machinery exclusively for taxable supply. But after 4 years, this has become exempt supply. Actually, you have not done anything, only government has done. That's what I said. Even government done something, we have to face the consequences. So, from 1st October, such machinery will also be used for manufacturing product. What also? Very good. So, we are going to use for gamma also. So, earlier it was only taxable. Now, the government has changed that to exempted. And now we are going to use for both beta and also for gamma. That means one is exempted and other is taxable. It become what credit? Fantastic. But I can't bring that amount to the electronic what ledger? Credit ledger, because already it reflected in electronic. Machinery Z purchased on 1st October 2 years ago, still 3 years are pending, for being used in manufacturing all the 3 products. All the what products, man? 3 products. That means machinery Z purchased on 1st October 2 years ago for being used in manufacturing of all the 3 products means earlier it was a what credit? Common credit. This how much rupees, man? 50. Raw material used for manufacturing. Till now we have talked about the capital goods. Now we are going to talk about the raw material used for manufacturing. Alpha purchased on 5th October. Now alpha is taxable. So 100% ITC can be taken in one shot. Because for raw material there is no concept of apportionment for 5 years. Raw material used for manufacturing, beta purchased on 10th October. Beta now it is exempted. So no ITC. Sir, for raw material used for manufacturing, gamma purchased on 15th October. Now gamma is taxable. So full ITC, 18,000 ITC can be claimed. Compute the following. Amount of ITC to be credited to the electronic credit ledger for the month of October. Amount of aggregate value of common credit. Common credit attributable to exempt supply for the month of October. GST liability of company payable through electronic what ledger for the month of October if opening balance of ITC is nil. Note, assume all the procurement made by company are from the state other than what Pradesh. Now the company is situated in Uttar Pradesh, but their purchases are from other than Uttar Pradesh, means what they would have paid? Interstate, so IGST they would have paid. Similarly, company sells all its product in the state other than what? Uttar Pradesh. So purchase is also from other than Uttar Pradesh and sales is also from. That means IGST has to be collected. Rate of IGST is 18%. Subject to information given above, assume that all the other necessary conditions for availing ITC has been fulfilled. Ignore interest if any and make suitable assumptions wherever required. This is a good question for revision of the concept. This is a good question for revision of the concept, which is apportionment of the capital goods, my dear lovable students. I'll be doing one by one. Please be with me. Amount of ITC credited to the electronic credit ledger for the month of October. Take machinery U, sir. Machinery U, 36,000. I will be parallelly reading that machinery note, sir. ITC in respect of capital goods used commonly affecting taxable supply and exempt supply denoted as what? A. Shall be credited to the electronic what ledger? As per rule 43 sub rule 1 clause C. That means, my dear lovable students, if there is a machinery, if that machinery has been or going to be used for both taxable and exempted, that amount should be credited to the electronic credit ledger and will be denoted as, sir, alphabet A. So that's what they have done here, sir. Machinery U is represented as A, sir, 36,000. Because by using that machinery, I am going to manufacture, sir, alpha, beta and gamma. So that is called as common credit. That amount will come and sit in the electronic. Very comfortable, sir. Fantastic to the code. With regard to the second machine, machine V, sir, with that machine, what I am going to do, you know, ITC in respect of capital goods used or intended to be used exclusively for effecting supply other than exempt supply. But including zero rated supply. We all know that zero rated supply will be treated as taxable supply. For zero rated supply, you are entitled to claim ITC. Shall be credited to the electronic credit ledger as per rule 43 sub rule 1 clause B. That means, sir, if any plant and machinery, if you are exclusively used for taxable supply, that amount will come and sit in the electronic credit ledger, but it will not be treated as what credit? Common credit. It will not be treated as common credit. Because for the second machine, sir, look at the wordings. Machine V purchased on 1st October for being used for manufacturing product what and what? Now alpha and gamma. Now what is the, sir, relevance of alpha? Taxable. For gamma, taxable. That means exclusively that machinery is going to be used for taxable. Then, my dear lovable students, sir, that amount can come and sit in the electronic credit ledger, and you can take the credit in one shot, not the life of 5 years, right? This is as per rule 43 sub rule 1 clause B, right? Now coming to the next machinery, man, machinery W. What is the status of machinery W? What they have done with that? Machinery W purchased on 1st October for being exclusively used in manufacturing the product what? Beta. It is exclusively for exempted product. Don't even bring that ITC to the electronic credit ledger. That's what they are saying with regard to note number 3. Just read it, sir. ITC in respect of capital goods used or intended to be used exclusively for effecting exempt supply shall not be credited to the electronic credit ledger as per rule 43 sub rule 1 clause A. So we can summarize like this, man, sir. Rule number 43, basically, sir, rule 43 sub rule 1 clause A is saying that if there is a capital goods, if that capital goods has been used exclusively for exempted supply, exclusively for exempted supply, my dear lovable students, don't even bring that ITC to the, so don't bring to electronic credit ledger. Comfortable, sir? Whereas rule 43 sub rule 1 clause B, this is what clause B is all about, right? What they are saying, if there is a capital goods, if that capital goods has been used exclusively for taxable supply, including ZRS. So there is a capital goods, sir, that has been used for taxable supply, including ZRS, but excluding exempt supply. Then, sir, you can take ITC, which is 100% in one shot. Comfortable? Whereas with regard to rule 43 sub rule 1 clause C, that's what here they are saying, sub rule 1 clause C. Sir, if you are going to use a plant and machinery for common, for what? Common. That's what clause C stands for common. So there is a capital goods. If you are using for taxable, exempted, zero rated supply, everything, my dear lovable students, then you can bring the ITC to the, by treating it as the life of the asset to be assumed to be 5 years. Fantastic to the core. That's what the 3 things we have done. So here with regard to the next machinery what? Y. Machinery Y. The next one, machinery, sir, we have read machinery W, no? Yes, sir. Machinery W. What we have done with that machinery W? Exempted supply. Okay, right. So the first one second. Machinery U, which has been used, sir, for common, both for taxable as well as exempted. Sir, I bring to the electronic what ledger? Credit ledger. And I am going to claim it over a period of 5 years. Fine. This is done, sir. For machine V, what is the category of the machine? Exclusively for taxable supply. 100% of the ITC I can claim in one shot, and I can bring that amount to the electronic what ledger as per what? Rule 43 sub rule 1 clause B. Coming to machinery W, man, sir, what machinery W is saying that? Read the status of machinery W. Purchased on 1st October for being exclusively used in manufacturing product what? Beta. So exclusively exempted product. Don't even bring to the electronic credit ledger. That's why we have put a dash here. Comfortable, sir? Now with regard to machinery Y, what we are going to do with machinery Y? Machinery Y purchased in 1st October. How many years ago? 4 years. But still 1 year, sir, life is pending. That is a problem. If 5 years has been elapsed, then no applicability is there. For being exclusively used in manufacturing product what? Beta. Earlier beta was a taxable product. So 100% of the ITC you would have brought to the electronic credit ledger, and the 100% of the ITC you would have utilized. You would have what? Utilized. If you analyze the question here, sir, saying that what is the balance available in the ITC? ITC is nil. That means that amount has been utilized to 0. That's why the highlight of the point. That's why they are saying that opening balance of the ITC is nil. That means that ITC is not there in the electronic credit ledger. It has been utilized to set off the output tax payable. Hello. But now that is become an ineligible ITC. Why it has become ineligible ITC, my dear lovable students? Because I promised to the government that I will use this plant and machinery exclusively only for the taxable supply. 4 years it was like that only. Sir, he has not changed it. Government has changed it. Sir, because of that, now it become that 1 year ITC has become ineligible ITC. Ineligible. ITC. And now what is going to do with that? From 1st October, such machinery will also be used for producing gamma. What is the status of gamma? Taxable. That means this has become exempted. This has become taxable. This is called as change in use. What in use? Change in use. If there is any change in use, the credit will become common credit. Are you comfortable? For that, what is the machine name? Machinery? Y. You have to refer note number 4. We will refer note number 4. Come on. Machinery Y is being used for effecting both taxable and what supply? From 1st October. Prior to that, it was exclusively used for effecting what supply? Taxable supply. Therefore, ITC in respect of such machinery would have already been credited to the electronic what ledger? So now there is no question of concept of bringing the amount to the electronic what ledger? Credit ledger. That's why amount of ITC credited to the electronic credit ledger we have put a what? Dash. Here it is dash. Here it is dash. Hello sir. Because this is the calculation for amount to be credited to the electronic what ledger? Paka? But this amount should be considered when you are calculating the common credit. If you see working note number 2, aggregate value of common credit, you tell me machinery U, for what purpose they have used? For taxable. For all the NSR product they have used. So that amount will come and sit in the electronic credit ledger, and also it has to be considered for the purpose of computation of the what credit. That's why even in 36,000 this has been taken into account. Whereas my dear lovable students, what is the status of machinery V? Only taxable. Only taxable. That means it will come only in the electronic what ledger? Credit ledger. It will not come in the what credit? Common credit. That's why 18,000 is missing in the common credit. Comfortable? Whereas with regard to machinery W, what you have done? Only exempt supply. It will not come and sit in the electronic credit ledger, but also it will not come and sit in the calculation of the what credit? Comfortable? What is the story of machinery Y? Both taxable and exempted? Yes sir. What is the story? Machinery Y has been used for already used or to be used? 4 years already used for taxable supply. Now there is a change in use. There is a shift in use. After the shift in use, we are going to use it for common. That means since it already the credit has been reflected in the electronic credit ledger, the again credit will not come. Second time credit will not come. Hello? Yes sir. But that amount has to be taken into account for common credit. How much is the amount for which machinery number? Y 72,000. How much is the credit? 72,000. Out of that 72,000, 4 year already lapsed. Or only 1 year is pending. Like that calculation and all you should not do. Sir, during the life of 5 years, if there is any change in use, the year of change will be considered as first year. From there again, 5 years will be counted. So you have to take, sir, 72,000. So input tax claimed on machinery Y purchased on 1st October 4 years ago for effecting taxable supply, but used for effecting both taxable and from 1st October in the current year. Sir, this is what NSR, they have given that note number 8 for this 72,000. I am reading. Where any capital goods which were used exclusively for effecting what supply are subsequently also used for effecting what supply, the ITC claimed in respect of such capital goods shall be added to arrive at the aggregate value of the common credit, total of the common credit, as per proviso to Rule 43 sub Rule 1 what D. That ITC, don't take proportionate ITC and all. The full ITC should be added to the common credit calculation. Are you comfortable up to this? Yes sir. Now I am come to the machinery number Z. Read what is the story of machinery number Z. Machine Z purchased on 1st October. How many years ago? 2 years. For being used in manufacturing of all the 3 products. Common credit. So already it would have been there in the Electronic credit ledger. So there is no second time reflection. So this 54,000 with regard to machinery Z will not come and sit in the electronic credit ledger. That's why here it is what? Dash. Are you comfortable? Yes, sir. Are you comfortable with the calculation of electronic credit ledger? So what is the one line summary of the entire discussion? If it's already reflected in electronic credit ledger, don't reflect again in electronic credit ledger. Only one time it has to be reflected in electronic. That's it. Sir, next one. Sir, now earlier it has been used for all the products. That means it was a common credit. So what is the amount of credit? 54,000. Even also now it will be part of common credit only, because this is how many years back? So that 5 years would not have been elapsed. Still how many years are there? 3 years. So value of A, we all know that A stands for common credit. Sir, for machinery Z purchased on 1st October 2 years ago for effecting both taxable and exempt supply is how much rupees, man? 50. So the aggregate value of common credit TC comes to 1,62,000. Comfortable? 1,62,000 means 36,000 plus 54,000 plus 72,000 comes to 1,62,000. We have done with all the capital goods item. Now we have to see with the what? Raw material. Very easy, one shot straight away. Only this one the implication will be there. No prior implications are there. Raw material used for manufacturing alpha. You tell me now alpha taxable exempted. Taxable. Bring that to the electronic what ledger? Credit ledger. And claim the ITC in one shot. Pakka? How much rupees? 27,000. Raw material used for manufacturing beta. Beta is exempted. Leave it, man. Don't bring that to the electronic what ledger? Credit ledger. Raw material used for manufacturing gamma. What is the status of gamma now? Taxable. Taxable. Can you bring that to the electronic credit ledger? Yes, sir. 18,000 you bring. All has been explained in note number 6. I'm going and reading note number 6, man. Sir, ITC in respect of input used for effecting what supply will be credited in the electronic credit ledger. ITC in respect of input used for effecting exempt supply will not be credited in the electronic credit ledger as per straight away rule number what? 42. Very comfortable, sir. Yes, sir. Sir, that's it. So you will be getting the amount of ITC credited to electronic credit ledger for the month of October is 99,000, which is nothing but 36,000 plus 18,000 plus 27,000 plus 18,000 comes to 99,000. Shall I proceed? Sir, out of this is a common credit 1,62,000. We have, sir, parallelly reconciled. Now I am going to calculate the common credit. Sir, the life of the asset should be treated as how many years? 5 years. So common credit for the month of October, sir, calculator, sir, 1,62,000 divided by 60 comes to how much? 1,62,000 divided by 60 comes to? This is what 2,700 is all about, as per note number 9. We'll read note number 9 and come back. ITC attributable to a month on common capital goods during the useful life shall be computed in accordance with Rule 43, Sub-Rule 1, Clause E as under total common credit divided by 60. What is a total common credit? 1,62,000 divided by 60 comes to the useful life of any capital goods shall be considered as how many years? From the date of invoice, and said formula shall be applicable during the useful life of the said what goods? Capital goods. Now that common credit has to be apportioned based upon the turnover. For that they have given the taxable supply, exempt supply. Am I right? So common credit attributable to what supply? For the month of October. So this 2,700 has to be apportioned. This is how they are apportioning. Sir, the amount of common credit attributable towards what supply? Be denoted as TE, total of the exempt supply, and shall be calculated. TE is equal to TR into E by F. TR stands for the total into exempt turnover divided by total turnover, where E is the aggregate value of the made during the tax period, and F is the full turnover that they are calling as total turnover in the state of registered person during the said period as per Rule 43, Sub-Rule 1, Clause G. So TR into turnover of exempt supply during the month of October divided by total turnover of XYZ Private Limited during the October. So what is the taxable supply? Sir, they have given the turnover details. Tell me, what is the alpha turnover, beta turnover and all? 9 lakhs, 10 lakh, 6 lakhs. So for alpha it is 9 lakh. Then for beta 10 lakhs. Okay, for gamma 6 lakhs. That means the exempt supply is how much lakh? 10 lakh divided by total 25 lakhs. This is the proportion for the exam supply. Shall we? That's what they have used here, man. 10 lakhs divided by 25 lakhs comes to 1080, sir. So 2700 into 10 lakhs divided by 25 lakhs comes to 1080. This 1080 is the what credit? Ineligible common credit. That has to be reversed or added to the output tax liability. That's what they have done here, sir. 1080. Are you comfortable, sir? Now computation of GST liability for the company for the month of October through electronic cash ledger, which is nothing but they themselves given that, sir, alpha, sir, beta, gamma. Alpha taxable exempted. What is the turnover? 9 lakhs into 18% is the alpha's, sir, output tax collected. Shall I proceed? Beta taxable exempted. No need to collect any tax. That's it, man. Gamma taxable exempted. Taxable 6 lakhs into how much percentage? 18% comes to. So total IGST payable on outward supply 1,62,000 plus 1,08,000 comes to 2,70,000. Comfortable, sir? Sir, 2,70,000. Common credit attributable to exam supply for the month of October is how much? 1,080. This also has to be added to the output tax liability in order to enjoy the full ITC. What is there in the electronic what ledger? Credit ledger. So 2,71,080 is the total output tax collected for the month of October. Less ITC available in electronic credit ledger. Sir, electronic credit ledger total ITC available is how much? 99,000. 90, which comprises of, sir, the amount available in the electronic what ledger? Credit ledger. Correct? So, less 99,000 IGST payable from the electronic cash ledger is 1,72,000. And so, what and all we have done is, sir, only this machinery Z is being used for effecting both taxable and what supply from 1st October 2 years ago. Therefore, ITC in respect of such machine would already be credited to the electronic what ledger. No recredit concept, man. The aggregate of amount A credited to electronic credit ledger in respect of common capital goods whose useful life remained during the tax period to be denominated as total of credit shall be common credit in respect of such capital goods as per Rule 43, Sub Rule 1, what D? Clause D. Common credit attributable to exam supply along with applicable interest, which is to be ignored in this case, shall during every tax period of the useful life of the concerned what goods? Capital goods to be added to the what tax liability. That's why ineligible common credit has been added to the, as per, sir, Rule number 43, Clause 1. Sub Rule 1, Clause H. Are you all ready with me? This, sir, notes we can ignore. No need to read it. They have, sir, omitted some omission. We have already done this in the last class. So you tell me, I will tell you a situation. Now you have to tell me what you are supposed to be done. Read it. This is the revision part. Machinery you purchase now, 1st October, for being used in manufacturing all the 3 products. What is the tax treatment? Sir, please bring that to the electronic credit ledger. Sir, treat it in the common credit calculation and take the life as 5 years. That's a game over. Machinery we purchased on 1st October for being used in manufacturing product alpha and gamma. That means just now you have what? Purchased it for exclusively taxable item. So bring that to the electronic credit ledger. Don't take that to the common credit calculation. Take ITC in. That's a game over. Machinery W purchased on October, 1st October now for being exclusively used in manufacturing product got beta. It is for exempted. So don't bring the calculation to the electronic credit ledger. Don't bring to the calculation of the, there is no concept of what at all? ITC at all. Machinery Y purchased on 1st October 4 years ago. That means still 1 year is pending. That is a highlight of that adjustment. For being exclusively used in product, manufacturing product beta. What was the status of beta? Taxable. So already you would have brought the credit to the electronic credit ledger and you would have taken ITC in one shot. That means there is no concept of recredit in electronic credit ledger in GST. So there this amount will not be reflected. But what you have done now from 1st October, such machinery will also be used for manufacturing product gamma. That means, sir, you are going to use it for beta and gamma, whereas beta is now exempted and gamma is now taxable. That means you have shifted from the taxable, sir, to the exempted common credit. Right? So this amount has to be taken into account for only for the purpose of computation of what credit? Common credit. So from here onwards again, how many years will be calculated? Machinery Z purchased on 1st October. How many years ago? That means still 3 years are pending for being used in manufacture of all 3 products. So this is still there as the common credit calculation. Earlier also it is common credit. Now also it is what credit? So for the month of, for the calculation of this month, sir, consider this value in the what credit man? Common credit. Very comfortable, sir. So you will get what is the amount to be credit, and here also this is raw material. This is for alpha. What is the status of alpha? So bring that the amount to the beta, exempted, gamma. So these 2 items you bring to the electronic credit ledger. So you will get what is the amount available in the electronic what ledger? Credit ledger. That you can take it as ITC in one shot. Are you all really with me? Yes, sir. Against output tax liability, 99,000 can we claim it as ITC. Actually, inside this common credit is there or not? Inside this 99,000, common credit is there or not? Yes, sir. But now you can take ITC in one shot. You may have a doubt, sir. How, sir? Because if you are taking ITC for this 27,000 in one shot, okay, I can understand. Because this is taxable. Raw material only. This is one shot raw material only. Even this 18,000 one shot, okay, fine. Because that machinery is going to be exclusively used for taxable supply. But how you can use this 36,000 and how you can use that 36,000 in one shot? Because that is common credit. No. What Act is saying that take that 36,000. No problem. In next month, sir, for the purpose of computation of common credit, include this 36,000. So put divided by 60. So 1 month, what will be there? 1 month common credit you will get. That you apportion based upon what and what? Taxable and exempted. Assume next month there is no exempted turnover at all. Assume. That means the entire common credit is a eligible common credit. If next month 50% is the taxable and exempted. So 50% of the common credit will be ineligible common credit, which you have already taken as what? ITC. That you have to add to the what tax? Output tax along with the interest. Output tax? That's what they have here. They specifically mentioned that here when you see, sir, common credit attributable to the what supply? Exempt supply. Along with the applicable interest, which is to be ignored in this case. In this question, we just added to the what tax? Output tax, but no interest implication has been made in this. For example, next month, sir, this month 99,000 you claim it as what? ITC, right? Actually, this 99,000 include what credit also? Common credit. Act is saying that whatever balance available in the ECL, you can take it as what? ITC. No issue. Now you don't worry. Next month, you have a separate calculation sheet for common credit. Divided by 60, you will get a monthly common credit. That you apportion based upon taxable and exempted. Sir, to the extent of exempted common credit, which is called as ineligible common credit, has to be added to the output tax liability. That credit you would have already availed last month itself. Yes, sir. For that, now you have to pay what? Interest. So once you pay the interest, man, it will be nullified as if no ineligible common credit has been enjoyed by you. So what a beautiful question you just see, man. Sir, like this question when you try before the examination, then only examination question paper will be easy. That's why I am doing the most important part, ITC. Because once you've done ITC, man, it is equal to you have done the entire GST part. Are you really with me? Read the question very properly. And sir, do the question, then only you will get a control. Sir, revision is the key to success. Sir, we are moving, then will be moved into illustration number 18. So we can say that out of our in slot number 4, out of 5 questions, 2 questions has been completed. So we have done 2 questions out of 5 question target. So this is the 3rd question. Every question is a good question. Every question is a revision question. All-in-one store is a retail chain of departmental store having presence in almost all metro cities across India. Both exempted as well as taxable goods are sold in such stores. So they are selling both taxable goods and as well as the stores operate in a rented properties. So they are paying rent. So the service provider is providing supply of services. All-in-one store pay GST under regular scheme, not composition scheme. They are paying tax under regular scheme. In Mumbai, store operators in a rented complex, a part of which is used by the owner for store for personal resident purpose. Oh my God. So a part of the store is used for personal purpose, residential purpose. That rent will not be allowed as a deduction in Income Tax Act. Okay, fine. That GST will not be claimed as ITC because partly used for business and partly used for personal. Apportionment concept will be applicable. All-in-one store Mumbai furnishes the following details for a month. Aggregate value of various items sold in the store. These are the items sold. Taxable item 42 lakh. For that we are supposed to collect GST. Items exempt via wider notification 12 lakh. For this GST will not come. Items not leviable to GST 3 lakh like alcoholic liquor for human consumption or HP man, whatever it may be, 3 lakhs. Mumbai stores transfer to another all-in-one store located in Goa. It's an interstate branch transfer. It will attract what? GST. Certain taxable item, very important one, certain taxable item for the purpose of distributing the same as what sample? Free sample. That means without consideration, they have moved from related or distinct person to a related or distinct person. Value declared in the invoice for such item is how much lakh? 5 lakhs. So 5 lakhs is the open market value. Such item are sold in the Mumbai store at how much lakh? 8 lakhs. In the invoice they mention 5 lakh, but generally to an unrelated customer they are selling at how much lakh?
8 lakh.
So open market value is 8 lakh, not the 5 lakh. But the value mentioned in the invoice is only aggregate value of items procured for being sold in the store. This is sold, this is procured. Taxable item they purchase 55 lakh. Items exempt by the notification 15 lakh. Item not leviable to GST 5 lakh. Freight paid to GTA for inward transportation of taxable item 1 lakh. We know that this is RCM, a reverse charge basis. Freight paid to GTA for inward transportation of exempted item 80,000. Fantastic to the core. This is for taxable item. This is for exempted item. Pakka. Freight paid to GTA for inward transportation of non-taxable item. That means for everything you have paid the freight. Now question arises. For which one RCM will be applicable? For everyone or only for taxable one is a question to be answered. Next expense they are noting. Monthly rent payable for the complex is 5,50,000. Monthly rent 5,50,000. 1/3 of the total space available is used for personal and what purpose? So 2/3 ITC only available, 1/3 should be disallowed. Activity of packing the item and putting the label on the store along with sale price has been outsourced. Amount paid for packing all the item is 2,50,000 rupees. Salary paid to regular staff at the store is 2 lakh. Super there. Testing schedule 3 item. Service has been provided by the employer to the employee. Will neither be treated as supply of goods nor be treated as supply of services. Fantastic. GST paid on input used for personal purpose, put it on dustbin, not entitled for ITC. GST paid on rent-a-cab service availed for transportation of employees, which is not obligatory under any law, 4,000. They are talking about blocked credit. GST paid on items given as free sample, there is no consideration, so it cannot be taken as ITC. Given the above facts, available facts, you are required to compute the following. ITC credited to the electronic credit ledger, super sir. First you have to calculate what is the amount of ITC to be credited to the electronic. Then what is the amount of common credit? ITC attributable towards exempt supply out of what credit? Common credit. Eligible ITC out of common credit. Net GST payable from electronic cash ledger for the month if opening balance of ITC is nil. Super sir, 5 things we have to calculate. GTA has not exercised the option to pay tax itself. That means GTA FCM provisions will not be. Tax is payable on such services at 5%. The rate of GST in all other cases is 18%. Ignore CGST, SGST or IGST for the sake of what? Simplicity. All the inward supplies are procured from what supplier? Wherever applicable, the amount given are what of tax? Subject to the information given above, assume that the other condition necessary for availing ITC has been. So 5 things basically we are supposed to calculate. Number 1, what is the amount to be credited to the electronic? Common credit. ITC attributable towards exempt supply out of the eligible ITC out of the common credit. Sir, net GST payable. Sir, brilliant question. Sir, be with me one by one. Computation of ITC credit to the electronic what ledger? Credit ledger. As per rule number 42, what is rule number 42? Apportionment. If one raw material has been used for both taxable and exempted input or input services, then you are supposed to apportion the ITC paid That's what rule number 42. The ITC in respect of input or input services being partly used for the purpose of business and partly for what purpose? Or partly used for effecting taxable supply and partly for effecting shall be attributed to the purpose of business or for effecting what supply. This is the wordings of rule number 42. Rule number 42 is saying that if you are having any input or input services, if that input or input services has been used partly for business and partly for other than business, partly for taxable and partly for exempted, then concept of apportionment will be ITC credited to the electronic credit ledger to registered person C1. This is the C1 credit number 1 is calculated as T minus what is T? Total credit minus T1 plus T2 plus T3 is the target. What is this, sir? I need a revision. Sir, I am coming, sir. T stands for total input tax involved on what and what? Input and input services in a particular what period? Then T1, T2 and T3. T1 is the input tax attributable to input and input services intended to be used exclusively for what business purpose? That has to be put it on dustbin, should not bring to the ECL. That way I am going to minus it. Then input tax attributable to input and input service intended to be used exclusively for effecting exempt supply. So that is what T2 and T3, sir, input tax in respect of input and input services on which credit is blocked under what? So from the total T bracket of T1 plus T2 plus T3, you will get the total disallowances, put it on dustbin. So we are going to calculate one by one. So tell me what is the formula? T minus T1 plus T2 plus T3. T1 is exclusively non-business. T2 is exclusively exempt. T3 is blocked credit. So now I am going to calculate the total T. First I am going to calculate the total T from the expenses. Okay. GST paid on taxable item. You tell me for how much rupees they have purchased? 55 lakhs they have purchased. When you, sir, look at the question, taxable item has been purchased for how much lakh?
55 lakhs.
So on this 55 lakhs, they would have paid what? GST. They specifically said that for simplicity, take 18% as GST. So 55 lakh into 18% comes to 9 lakh. Sir, items exempted by notification. Since it is exempted, no GST is paid, so nothing will come. This is on purchases I am calculating. Items not leviable to tax, since not taxable, no GST has to be paid. Comfortable. Whereas specifically they said that, sir, for GTA has not adopted FCM. So we are supposed to pay what? RCM. For that RCM, taxable exempted concept is not there. Whether you are transporting taxable goods or exempted goods, you are liable to pay tax on what CM? RCM. GST paid under reverse charge on freight paid to GTA for inward transportation of what item? Taxable item. 1 lakh into 5% comes to how much? 5,000. Super, sir. Sir, GST paid under reverse charge on freight paid to GTA for inward transportation of exempted item. My dear lovable students, sir, how much rupees, sir? 80,000 into 5% comes to GST paid under reverse charge on freight paid to GTA for inward transportation of non-taxable item. 20,000 into 5% come to 1,000. So these all will come and sit in the total T. So total T means, sir, the GST paid on the purchases plus GST paid on the expenses, right? GST paid on monthly rent. Yes, rent. Sir, renting or leasing is supply of services. Supply includes all forms of supply of goods or services or both, such as sale, barter, transfer, exchange, license, lease, rental or disposal. So 5,50,000 into 18% comes to 99,000. My question to you is, GST paid on monthly rent is a FCM or RCM? FCM. This is not covered under what? RCM, right? Renting of immobile properties RCM only for government sector, not for private sector. Shall I proceed further? GST paid on packing charges 2,50,000 to 18%, 45,000. Is this FCM, RCM? FCM. Salary paid to staff at the store. Service by an employee to the employer in the course of our employment in relation to his employment is not a supply in terms of para 1 of schedule 3, and hence no GST is payable thereon. Comfortable, sir. GST paid on input used for what purposes? Personal purposes. GST paid on input for personal purposes. This will become total T, but we will remove in T1, T2, T3. I am now calculating whatever total GST paid. So there don't check the eligibility, whether this is eligible ITC, ineligible ITC or blocked credit and all. Hello, sir. GST paid on rent-a-cab services availed for business purpose 4,000. GST paid on items given as free sample 4,000. So the total input tax involved during the month is 11,57,000. This is what T. Total ITC paid. This total ITC paid means ITC on purchases, ITC on expenses, RCM, every ITC paid will be counted. Shall I proceed? Now I am going to minus, sir, T1, T2 and T3. So for every what? ITC paid, I am going to evaluate. What evaluation, sir? GST paid on monthly rent is there. That is FCM. The service provider has supplied, collected GST from me, but the entire premise has not been used for the purpose of business. Some portion of the premises has been used for personal. That means, sir, apportionment is required. So GST paid on monthly rent attributable to personal purpose. Sir, what is the GST, sir? 99,000. Of that 99,000, one-third should be put it on dustbin. So 99,000 to one-third comes to 30. Next one, GST paid on input used for personal purpose 5,000. This will form part of T, but this has to be reduced in T1, T2 and next one, input tax exclusively attributable to what supply? Non-taxable supply. That is T1. How much rupees? GST paid under reverse charge on freight paid to GTA for inward transportation of what item? Exempted item. As per section 247, exempt supply means inter alia. Supply which may be wholly exempt from tax by way of notification issued under section what? 11. Hence, input service of inward transportation of exempt item is exclusively used for effecting what supply? That means by getting the GTA services, you have provided an exempt supply. So, can that ITC available? Not available? Not available. Because by using that inward supply, I have not provided a taxable outward supply. I have provided a exempt supply. So this 4,000, sir, should be reversed as per T1, T2 and T3. GST paid under reverse charge on freight paid to GTA for inward transportation of what taxable item? Exempt supply includes non-taxable supply also. We already know exempt supply includes three things. Are you remembering? In that exempt supply includes what supply? Hence, input service of inward transportation of non-taxable item is exclusively used for effecting what supply? Exempt supply. So this also has to be reversed. That means what is available? GTA RCM you paid for transportation of dash goods is allowed. Taxable goods is allowed. What has to be reversed? Exempted goods and non-taxable goods. ITC exclusively attributable to exempt supply. Again, this is T2. 5,000 should be reversed. GST paid on rent-a-cab services availed for business purpose. ITC on rent-a-cab service is blocked under 17 subsection 5 as the same is not used by all-in-one store for providing the rent-a-cab for as a part of taxable composite or what supply? Mixed supply. This is a blocked credit, right? Which is T1, T2 or T3? T3 is a blocked credit. GST paid on items given as free sample. Again, that is a what credit? Blocked credit. Is it T1, T2 or T3? So the input tax for which the credit is blocked under 17 subsection 5. Sir, totally 4,000 plus 4,000 comes to 8,000. Since GST paid on input used for personal purpose has been considered while computing what one? Same as not being considered again in computing what? T3. So what is the formula? Total of T minus T1 plus T2 plus T3. Shall we calculate, man? So the ITC credited to the electronic credit ledger is called as what? C1. Credit C1. Total amount to be credited to the is equal to T minus T1 plus T2 plus T3. You tell me what is the T1? Just now you calculated T1. T. 11,57,000. That's what T total. From that you have to remove the T1, T2 and T3. Just now we calculated how much? 8,000 is what the T3, which is non-business or exempt or blocked. Blocked. This is done. Now T2 total is how much? 5,000, which is nothing but 4,000 plus 1,000 comes to 5,000. This is what T2. Whereas, sir, 33,000 plus 5,000 comes to, that is what the total of what? T1. Comfortable, sir? So 38 plus 5,000 plus 8,000 comes to 51,000. 11,57,000 minus 51,000. 11,06,000 is called as C1, which is what credit? Which is a credit which has to be credited to the electronic. In that ITC exclusively attributable to taxable supply will be there. That is called as what for? T4. So C2 is equal to C1 minus T4. Hello sir. Sir, where C2 is the what credit? Common credit. T4 is the input tax credit attributable to input and input services intended to be used exclusively for effecting what supply? So computation of T4, shall we calculate T4? Sir, what are the exclusive item on the taxable supply? GST paid on taxable item. Sir, 55 lakhs was the taxable purchases, right? 55 lakhs into 18% comes to GST paid under reverse charge on freight paid to GTA for inward transportation of what item? That is exclusively for taxable product. So 5,000. So input tax exclusively attributable to taxable supply comes to 9 lakh 95,000. Very comfortable. So how much is the amount you taken to the ECL? 11 lakh 6,000. From the 11 lakh 6,000 reduce 9 lakh 95,000. 11 lakh 6,000 minus 9 lakh 95,000 comes to. Is the C2 called as what credit? Common credit 2C are there. That's why it is called as C2, already explained in class. Comfortable sir? Now the C2 has to be classified into two category, taxable and exempted. So computation of ITC attributable towards exempt supply out of what credit? Common. ITC attributable towards exempt supply is denoted as D1. D1 means disallowance 1 and calculated as C2 into E by F, where E is the aggregate value of what supply? During the tax period. F is the full turnover, which is otherwise called as total turnover in the state of the registered person during the what period? Aggregate value of the exempt supply during the month will be, sir, I am going to calculate the exempt supply. They have given two things, exempt supply. You tell me, what are the exempt supply turnover given in the question? 12 lakh rupees wider notification and 3 lakh rupees not leviable to GST. Exempt supply includes non-taxable supply also. So 12 lakh rupees plus 3 lakh rupees comes to 15 lakhs is the amount of what supply? Exempt supply. Shall we calculate a total turnover? Which is nothing but man, total turnover in the state during the year is equal to, you tell me what is the taxable supply? Outward supply. Taxable outward supply? 42 lakhs already given in the question. Plus 42 lakhs plus 12 lakhs plus how much lakh? 3 lakhs. Total comes to how much lakh? 50? Sir, in addition to that, actually Mumbai store transferred to another all-in-one local store in Goa. Even though there is no consideration, as per Schedule 1, 7 subsection 1 clause C read with Schedule 1. Correct? Supply between related or distinct person made in the course or furtherance of business, even without consideration, will be treated as deemed supply. For that, the value declared in the invoice will be taken or the open market value will be taken. Open market value has to be taken as per the valuation rules. Rule number 27, 28, 29 as per that valuation rules. What is the open market value, my dear lovable students? 8 lakhs. That 8 lakhs only they have taken here. So, total turnover in the state during the year comes to how much lakhs? 65 lakhs. Now, what is the common credit? We got 1 lakh 11,000 into what is the exempt turnover? 15 lakhs divided by total 65 lakhs. So, you will be getting the 25,615 is the disallowance number 1. Is the disallowance number 1. Sir, transfer of item to store located in Goa is a dash state supply. In terms of section 7 of the IGST Act, don't confuse with CGST Act, section 7 of the, and hence includable in the what turnover. Such supply is to be valued as per rule number what? However, the value declared in the invoice cannot be adopted as the value since the recipient as Goa is not entitled for full credit because goods are distributed as what sample? ITC, on which is what? Therefore, open market value of such goods, which is the value of such goods sold in Mumbai store, is taken as value of items transferred to Goa store. This is a point of appreciation. Only a student who studied valuation rule, only a student who studied the full GST provisions properly will be able to appreciate or understand this type of question. The problem what you may be facing is, sir, I am not able to link it with the various questions. For that, only one solution is there. You have to do lot of question. Once you do lot of question, automatically you will fall into the interpretation of the question. Then when you read the question, so many provisions will automatically connect to you. So what is the workbook which I have given? If you are able to solve that before examination, that itself is more than enough. Still 1 month is there. Don't worry about the time. Whether you are studying or not is a matter. We are having sufficient time. If you are able to do at least 5 questions, it will be revision. Fantastic to the core. So D1, disallowance number 1, we got 25,615. Sir, in this question, what is the C2 common credit total? 1,11,000. Out of 1,11,000, 25,615 put it on. That means 85,385 is the eligible common credit, which we are called as C3. So eligible ITC attributable for affecting taxable supplies denoted as what? C3, where C3 is equal to C2 minus D1. Sir, what is C1? Amount credited to the electronic credit ledger. What is C2? Which is nothing but C1 minus C4, you will get the C2. From the C2 minus D1, you will get the C3, which is the eligible common credit. Eligible ITC on common credit. Now, the last one, computation of net GST liability for the month. GST liability under forward charge, that means output tax collector. Items, taxable items sold in the stores, 42 lakhs into how much percent? Comes to 7 lakh. Taxable item transferred to Goa store, 8 lakh into 18% comes to total output tax liability under forward charge is how much lakh? Less ITC credited to the electronic credit ledger. Sir, what is the amount credited to electronic credit ledger? Here you are having ITC credited to the this is total. ITC credited to electronic credit ledger is how much? Have they given anything about ITC credited to the electronic credit ledger? We have to find out, sir. Because how much is the amount to be credited to the electronic what ledger? Because what we have find out, we find out total T minus T1, T2, T3, we will get the C1. C1 is the amount to be credited to the electronic credit ledger. We have already find out. How much is the C1? 11 lakh what? 6,000 is the amount credited to the electronic what? Credit ledger. But out of that 11 lakh how much? 6,000, 25,615 are what? Ineligible common credit. Correct? So, less ITC credited to electronic ledger is how much? 10,80,385. How it become 10,80,385? What is the C1 we got? But here it is 10,80,385. What's the gap? 25,615 is the gap. Correct? Because this is what one? D1. This is disallowance of what credit? Common credit. So ITC credited to electronic credit ledger is 10,80,000. Basically, it's not the amount to be credited, it is set off. Net eligible set off. Because actually, how much will go and sit? 11 lakh 6,000 will go. But out of that, 25,615 is ineligible. So the eligible ITC I can take is 10,80,385. But my payable is only how much lakh? 9 lakh. So I have to carry forward the extra, which is 1,80,385. So the net GST payable will be nil. But GST liability under what charge? Reverse charge. That I have to pay from my pocket through electronic what ledger? Cash. Freight paid to GTA for inward transportation of taxable item, 1 lakh into how much percent? 5,000. Freight paid to GTA for inward transportation of exempted item, 80,000 into how much percent? 4,000. But this cannot be taken as ITC, but this has to be included in the T. Right? Freight paid to GTA for inward transportation of non-taxable item, 20,000 into 5 comes to how much? Total tax liability under what charge? Reverse charge. Come to how much? 10,000. This you have to pay from your pocket through electronic. So net GST liability to be paid is A plus B. As per 49 subsection 4, amount available in the electronic credit ledger may be used for making payment towards only what tax? Our tax payable under reverse charge is not a what tax? In terms of section 2 subsection 82, therefore tax payable under reverse charge cannot be set off against the ITC and thus will has to be paid in. So that extra amount you are supposed to carry forward, But that reverse charge RCM you have to pay from your pocket mandatorily through electronic. What a question, how many things are connecting? Are you able to appreciate? While computing the net GST liability, ITC credited to the electronic credit ledger can alternatively be computed as follows. We have actually done the answer. ICAI has given an alternative working, which is nothing but what is the GST paid on taxable item? 9 lakh. Items exempted, we will not pay any GST. Items not leviable, we will not pay any GST. GST paid under reverse charge, 5,000 rupees, we will pay and we are entitled for ITC. Sir, GST paid under reverse charge on freight paid, we will pay, but that is not entitled for what? ITC. GST paid under reverse charge on freight paid to GTA for inward transportation of non-taxable item, we will pay, but it is not entitled for GST paid on monthly return. Actually, we have paid 5,50,000 into how much percent? 18%. But out of that, 1/3 of that amount is ineligible. So only 66,000 is eligible, right? GST paid on packing fully eligible. Salary paid to staff, there is no concept of what at all? GST at all. GST paid on input used for personal purpose, not eligible for ITC. GST paid on rent-a-cab service is a blocked credit, not eligible for ITC. GST paid on items given as what sample? Free sample, it's a blocked credit, not eligible as ITC. So the total amount credited to the electronic credit ledger is 11 lakh. This we have calculated without T minus T1 plus T2 plus T3. This is unprofessional answer. The above is a professional answer where whatever GST paid including RCM will be included as T minus T1, which the ITC has been exclusively used for non-business use. T2, ITC has been exclusively used for exempt supply, and T3, ITC is a blocked credit. So we aggregating T1, T2 and T3, and from the total T we are minusing that. We are getting the C1, which is the amount which we go and sit in the, that's what 11,06,000 is all about. From that, sir, we are reducing T4, we are getting the C2. From the C2, we are reducing D1. That D1 is what? ITC on the common credit, 25,000 So the net ITC available for credit comes to 10,80,385. This amount only they have set it off here as 10,80,385. Are you all really with me? So what a question. Look at this question. Sir, like this question is a 14-mark opening batsman for your examination, my dear lovable students. First of all, if you have to do this question, the primary thing is you should know all the provisions. Look at it. They are linking or mixing the questions. So you have to, one side you have to revise the provisions on a thorough basis and you have to apply the provisions, my dear lovable students. So out of our 5 question target, we have done 3 question out of 5 question. And we are moving into illustration number what? 19, which is the 4th question, my dear lovable students. So out of our 5 question target, my dear lovable students, we have done 3 questions. Shall we move into the 4th question? One shop is a retail supplier of both taxable and exempted goods. So they are dealing both taxable goods and exempted goods. When the question is from this angle, it is for apportionment. Registered under GST in the state of Rajasthan. One shop has furnished the following details for a month. Details of sale, supply of taxable goods, how much lakh? 50 lakh. Supply of goods not leviable to GST, 10 lakhs. Are not liable to GST is also exempt supply. Right. Details of goods purchased for the shop, for being sold in the shop. Taxable goods 45 lakh. Goods not leviable to GST is how much lakh? 4 lakh. So this is turnover details, this is purchase details, fine. Details of expenses. Monthly rent payable for the shop is how much? 3,50,000. So the supplier would have collected GST on this, for this ITC can be taken. Telephone expense paid, 30,000 for bill of landline phone installed at the shop and 20,000 towards mobile phone, bill of the employees. Mobile phone are also given to employees for what use? Official use. Is this covered in the blocked credit list? Mobile phone is covered in the blocked credit list. Audit fee paid to a chartered accountant, 35,000 for filing of income tax return and statutory audit of preceding financial year and 25,000 for filing the GST return. 60,000. Sir, is this blocked credit? Not a blocked credit. Premium paid on health insurance policy taken for specified employees of the shop as per the company policy. Blocked credit. Only as per statutory obligation is freight paid to GTA, service taxable at 5% for inward transportation of goods, not leviable to GST. You have to pay the GST, but you can't take it as ITC. The same, the things start getting repeated. Freight paid to GTA, service taxable under reverse charge at 5% for inward transportation of taxable goods. You have to pay RCM and you can take it as goods given as what sample? Free sample, not included in the taxable value of 45 lakhs. Total comes to how much? 5,000. Sir, for this, without consideration they have supplied. Either it has to be treated as deemed supply or ITC has to be reversed at your option. All the above amounts are exclusive of all kind of taxes wherever applicable. All the inward and outward supply made by one shop are from or to registered supplier within Rajasthan. That means CGST, SGST will be applicable. Assume wherever applicable for the purpose of reverse charge payable by one shop. CGST, SGST and IGST rate are 2.5, 2.5, 5% respectively. CGST, SGST and IGST rate to be 6%, 6%, 12% respectively in all other cases. For reverse charge, it is 5%. Other than reverse charge, 6% basically. There is no opening balance in electronic cash ledger or electronic credit ledger subject to information given above, assuming that all other conditions necessary for availing ITC have been fulfilled. You are required to compute the following. ITC credited to the electronic what ledger? Credit ledger. This we can easily find out. Common credit available for apportionment. Easy. ITC attributable towards exempt supply out of common credit. Net GST payable from electronic cash ledger for the month. Same pattern of question is repeating by ICAI basically. Don't skip this 25 question from ITC, my dear lovable students. If you are preparing this 25 question, that will be a great preparation for your IDT paper. Computation of ITC credited to electronic what ledger? ITC of input tax attributable to input and input service intended to be used for business purpose is to be credited to electronic what ledger? Input tax attributable to input and input service intended to be used exclusively for what business purpose? For effecting exclusively exempt supply and on which credit is blocked under 17.5 is not credited to electronic credit ledger as per section 16 and 5. In the light of aforementioned provisions, the ITC credited to electronic credit ledger of one shop is calculated as under shall be GST paid on taxable goods 45 lakhs. GST paid, that means ITC. CGST 6%, SGST 6%. 45 lakhs into 6% comes to 2,70,000. SGST 6% comes to GST not leviable, goods not leviable to GST since not taxable, no GST is paid, nothing. GST paid on monthly rent of shop. The supplier would have collected GST from us. Sir, 3,50,000 is a rent paid. Into 6%, 21,000 and 21,000. GST paid on telephone expenses, 50,000. Into 6%, 3,000 and what? 3,000. Are you able to follow?
Yes, sir.
GST paid on audit fee. Auditor would have charged 60,000 fees. On that he would have charged 3,600 and 3,600. Comfortable, sir?
Yes, sir.
GST paid on premium on health insurance policy as per the what policy? Company's policy. ITC on health insurance service is allowed only if it is obligatory for what? To provide such service to his employee under any law for the what being enforced. This is as per 17 subsection 5 clause B. So we would have paid what? GST, but that cannot be taken as. So I am not taken into the computation table. Taxable goods given as free sample. ITC on goods destroyed, disposed by way of free sample is what? Blocked. So you can't take it as ITC. So that's what, man. The next one. Freight paid to GTA for inward transportation of what taxable goods? Under RCM. Since definition of exempt supply under 2 subsection 47 specifically includes what taxable supply? Input service of inward transportation of non-taxable goods is being exclusively used for effecting exempt supply, that is not entitled for. You have to pay from your pocket RCM, there is no doubt about it, but it is not entitled for. Freight paid to GTA for inward transportation of taxable goods under what charge? Reverse charge, my dear lovable students. This you have to pay as RCM and also you can take it as ITC. So the total ITC credited to electronic what ledger is from here, man. Take the calculator. 2,70,000 plus 21,000 plus 3,000 plus 3,600 plus 3,750 comes to 3,01,350. Are you all really with me? Less ITC reversal. You have to, because this is the amount will go and sit in the electronic credit ledger. This comprises of eligible ITC and ineligible ITC. We have to apportion that as per step number 2. Shall we? So we have to calculate the common credit. ITC credited to electronic credit ledger minus ITC attributable to input and input service intended to be used exclusively for effecting what supply? Section 17, read with rule number what? So you tell me what is the amount of ITC credited to electronic credit ledger? 3,01,350 and 3,01,350 of SGST, right? Sir, this is called as what one? C1. From the C1 we have to reduce, which is ITC on taxable goods. This is the ITC on taxable goods, 2,70,000 and 2,70,000. So you have to reduce 2,70,000 and 2,70,000. Comfortable? Because this is exclusively for what goods? Taxable goods. Less ITC on freight pay to GTA for transportation of what goods? If you reduce this, if you add these two, actually you will get T4. From the C1, if you reduce T4, you will get the C2, which is common credit, 27,600 and 27,600. Comfortable? Now this has to be apportioned based upon the turnover, exempted and taxable. So computation of ITC attributable towards exempt supply out of what credit? ITC attributable towards exempt supply is equal to what credit into aggregate value of exempt supply during the tax period divided by total turnover during the tax period as per section 17, read with rule number, which is nothing but, you tell me what is the exempt turnover given? 10 lakhs is the exempted turnover. Listen here straight away on the face. What is the total turnover? 60 lakhs. So what is the common credit just now you got? So 27,600 into 10 divided by 60 comes to 4,600 is the what credit? Ineligible common credit. So out of the total amount credited to the electronic credit ledger, reduce 4,600, the net ITC available will be 2,96,750 is what the ITC available. Shall we calculate the net GST payable? Which is nothing but output tax collected minus eligible ITC. Sir, GST liability under forward charge, supply of taxable goods 50 lakh into 6%, 3 lakh of CGST and total output tax collected under forward charge, only that is there, 3 lakhs and 3 lakhs. Less ITC, just now we finalized 2 lakh, how much? 96,750 and 2,96,000. You will be getting net GST payable under forward charge 3,250 and now I am going to calculate GST liability under what charge? Freight paid to GTA for inward supply, sir, 1,50,000 into 2.5% CGST and 2.5% freight paid to GTA for inward transportation of non-taxable. Even for that, we are liable to pay tax, but it is not entitled for. So 1,250 and 1,250. So total tax liability under reverse charge 5,000 and 5,000. So 3,250 plus 1,250 comes to. Sorry, 3,250 plus 5,000 comes to, sorry ma'am, 3,250 plus 5,000 comes to is the total GST liability. Here 3,250 plus 5,000 comes to 8,250 is the total GST payable through electronic what ledger? Amount available in the electronic cash ledger may be used for making payment towards what tax? Output tax as per section what? However, tax payable under reverse charge is not a output tax in terms of definition of output tax provided under section 2 subsection what 2. Therefore, tax payable under reverse charge cannot be set off against the input tax credit and then will have to be paid in. Sir, a student who saw my video of 19 question will be able to solve this question without any difficulty, man. Because now you have entered into the questions solving area. Sir, if you take the pen and paper and if you start doing the sum, you will be start getting a control or and confidence over the subject GST. So out of our slot, 5 question slot, so this is a big question slot, my dear lovable students. Out of 5 questions, we have solved, we are only pending with illustration number 20, which is the 5th question from this slot. I believe that you are enjoying the workbook series of ITC. So we have done 4 questions out of 5 questions. I am moving into illustration number 20, my dear lovable students. A very good, brilliant question. Mr. Rajesh Surana as the proprietorship firm in the name of Surana and Sons in Jaipur. The firm registered under GST in the state of Rajasthan manufactured 3 products MNO. Tax on N is payable under a reverse charge. Fine. 3 products are there, which is MNO. M is forward charge, N is reverse charge, and O is also forward charge because N is payable under reverse charge. The firm also provides taxable consultancy services. In addition to that, they are providing services also, not only goods. Firm has provided the following details for a tax period. Turnover of M excluding export sales 14 lakh. Without export, domestic tariff area DTA sales is 14 lakh. Turnover of N is 6 lakh. That will be paid by the recipient under reverse charge basis. Turnover of O excluding export sale, sir, which is domestic tariff area sale 10 lakh. Now they are coming for export. Export of M with payment of IGST. They adopted section 16 subsection 1 clause A. And I will tell you one thing, the prerequisite for this question is you should be complete refund. Without that you will not be able to appreciate or understand. Fine. Not eligible to avail benefit of merchant export under notification number something or something. Fine. 2 lakh, how much? 50,000. Export of O under letter of undertaking, how much lakh? 10 lakh. Under LUT option, sir, export of O, 10 lakh. Consultancy services provided to unrelated clients located in what country? Foreign country. That means export. In all cases, consideration has been received in convertible what exchange? Foreign exchange. We already completed what is export of goods and export of services. Both are 0 rated supply. So this is export 20 lakh. Sale of building, which is, sir, they are talking about schedule 3, excluding stamp duty 2.5 lakhs being 2% of the value. Entire consideration is received post issuance of completion certificate. Building was occupied thereafter only 1 crore and 20 lakhs. Fine. This is a schedule 3 item. Fine. This is a brilliant adjustment they are making actually. I will tell you while answering the question. This adjustment I will tell you. Interest received on investment in FD with a bank is an exempt supply. We all know that. Extending deposit loan or advance for which the consideration has been received by way of interest or discount. Sale of shares, we know that, sir, securities and shares and securities are, money and securities are outside the ambit of the definition of goods and services. Sir, 2 crore 50 lakhs, but purchase price is 2 crore 40 lakh. This is also another brilliant adjustment they are making. Point number 9. Legal service received from an advocate in relation to product M, RCM. They are clubbing RCM provision. Common input and input service used for supply of goods. And services mentioned above. Input 35 lakh, input services 15 lakh, total 50 lakh. That is, they are talking about apportionment. So one question they are asking the GST. With the help of above mentioned information, compute the net GST liability of Surana and Sons payable from electronic credit ledger or electronic cash ledger as the case may be for the tax period. Assume that rate of GST on goods and services are 12% and 18% respectively. Kandipa, for goods it's 12 and services it is 18. Ignore CGST, SGST, IGST for the sake of simplicity. After giving this much, they are saying that for the simplicity, subject to information given above, assume that all other conditions necessary for availing ITC has been fulfilled. Turnover of Surana and Sons was 85 lakhs in the preceding what year? Financially, it does not exceed 1.5 crores. They are entitled to travel through the composition levy if they want, but they have given 85 lakhs in a turnover. Fine. Sir, understand very clearly each and every point. Number 1, GST payable on outward supply. Is Surana is making any outward supply? Yes, sir. First, we are going to calculate what is the GST payable on outward supply. You have to tell me each one by one. Turnover of M. Sir, what is the domestic turnover of M? 14 lakhs. Into what is the rate for goods? Up 14 lakhs into 12% comes to 1,68,000 is the GST collected, right? Turnover of N, tax on N is payable under what charge? By the recipient, so it will not add to our output tax liability. They will pay RCM and they will take it as ITC. Hope you are able to appreciate. Turnover of O, what is the value for turnover of O? 10 lakhs. Into what is the GST rate on goods? So 10 lakh into 12% comes to 1,20,000. Comfortable? export of M with payment of IGST at 12%. What is the export value? This is not bond or LUT option. This is export with IGST. So we have to add it to the output tax liability. 2,50,000 into 12% comes to 30,000. But this amount you can claim it as refund as per rule number 89 sub rule 4 or 89 sub rule 5 as the case may be. Very important area for examination, my dear lovable students. Export of O under letter of undertaking under bond or LUT means no output tax will come. That's why they put it as nil. Export of goods is a what rated supply? In terms of section 16 subsection 1 clause A of the IGST Act. A zero rated supply can be supplied without payment of tax under LUT in section 16 subsection 3 clause A of that act. Fine. Consultancy services provided to independent clients located in what country? The activity is an export of services in terms of section 2(6) of the IGST Act. Sir, 5 conditions should be satisfied. Number 1, supplier of services located in India. The recipient of services is located. Place of supply service should be as per section 13(2) of the IGST Act. Sir, place of supply is the location of the recipient of the service. Payment for service has been received in convertible or in Indian rupees wherever permitted by the and supplier of service and the recipient of service are not merely establishment of distinct person. Fine. Export of service is a what rated supply? In terms of section 16 subsection 1 clause A of the what act? A zero rated supply can be supplied without payment of tax under LUT in terms of section 16 subsection 3 clause A of that act. It is assumed that export has been made under what? LUT. Zero rated can be supplied without payment of tax. No need that IGST has to be paid mandatorily. We are assuming that this export of service has been completed by enjoying the LUT or bond option. Hence, no output tax will come. Super, sir. Fantastic, sir. Sale of building. Sir, sale of building is schedule 3 item. This is a beautiful, fantastic adjustment, man. Sale of building is neither supply of goods nor supply of what? In terms of para 5 of what 3? Schedule 3 to the what act? CGST Act. Provided the entire consideration has been received after issuance of what certificate? By the competent authority or after its occupation, whichever is earlier. Hence, the same is not liable to what? GST. What is the value? 1 crore 20 lakhs. You look at the value, man. 1 crore 20 lakhs. Right? Excluding what duty value? Stamp duty value. What is the stamp duty value? 2,50,000. Being 2% of the value, which is 1 crore 20 lakhs into 2% comes to 2,50,000. Right? Right? Sir, you tell me, is sale of building covered in schedule 3 means, sir, is it need to collect any output tax? No, sir. No output tax will come. Interest received on investment in fixed deposit with a bank. Is it schedule 3 item or an exempt supply? Exempt supply, value is 4 lakh, no output tax will come. Because it's an exempt supply. Sale of shares are neither goods nor service in terms of section 2 subsection 52 and 2 subsection 102. Hence, sale of share is neither supply of goods nor supply of what? Service. And not liable to any tax. So 2 crore 50 lakhs, nothing will come. So total GST payable on outward supply is 3,18,000. This is what summarized here as GST payable on outward supply is 3,80,000. Comfortable? Now let's ITC, we have to work out the ITC, my dear lovable students. What are the ITC available to me? Sir, this is what the ITC. For ITC, I am working out the working note number 2, computation of common credit attributable to what supply? Exempt supply. Because there are exempt supplier also there. So the credit attributable to exempt supply, put it on dustbin. You tell me, common credit on input and input services. Tax on input. How much is the tax on input? What you tell me? 35 lakhs is the input. Into how much percent? 12%. 35 lakh into 12%? 4,20,000. Add tax on input services. How much lakh? 15 lakhs into 18% comes to 2,70,000. So 4,20,000 plus 2,70,000? 6,90,000 is the total tax paid. Hello, sir. Common credit. Because by paying that input, you are providing both taxable and exempted. Common credit attributable to what supply? Exempt supply. Sir, common, which is nothing but common credit on input and input services. Just so we find out how much rupees 6,90,000 into E by F, basically exempt turnover divided by full turnover, which is total turnover. What is the exempt turnover during the period? Is there any exempt turnover given? Is there any exempt turnover given? No, we have to calculate. For that, this definition, this notes plays a major role. Read the notes very carefully. I have highlighted everything in the class, all the adjustments. Sir, as per section 17 subsection 3, value of what supply include? Supply on which the recipient is liable to pay on reverse charge basis. Then, sir, transaction in what? Securities, sale of land, and subject to clause B of para 5 of what 2? Schedule 2, sale of what? Building. As per explanation to chapter 5 of the what rule? CGST rule, value of exempt supply in respect of land and building is a value adopted for paying what duty? And security is 1% of the sale value of such security. This is a definition of what? Exempt supply. I am reading once again. If anyone not able to appreciate, please appreciate properly. As per 17 subsection 3, value of exempt supply includes supply on which recipient is liable to pay tax on what charge basis? So reverse charge basis we will take. Plus transaction in what? Securities. Even though transaction securities is a what item? Schedule 3 item. So neither supply of goods nor supply of services basically. But still it will be treated as exempt supply. And sale of land. Sir, land will be treated as exempt supply. And subject to para 5B of schedule 2, which is building. And sale of building. Sir, for this what value I have to take, sir? As per explanation to chapter 5 of CGST rule, the value of exempt supply in respect of land and building is a value adopted for what duty value? And for securities, 1% of the sale value of the, further as per explanation to rule 42, aggregate value of exempt supply inter alia excludes, that means these items will not be included in the value of service by way of accepting deposit, extending loan or advance insofar as the consideration is represented by way of, except in case of banking company or financial institution, including an NBFC, engaging supplying services by way of accepting deposit loan or, therefore value of exempt supply in the given case will be sum of the value of outward supply on which tax is payable under what charge? What is the RCM turnover? You tell me. Look at 6 lakh. And value of sale of building. Sir, what is the amount of stamp duty value they said? Which is 2%, they have specifically mentioned in the question. If that is 2%, what should be the 100%? So 2,50,000 divided by 2% means 1 crore 25 lakhs. But what is the value given in the question? 1 crore? That you put it on dustbin. Because as per the definition, sir, on what amount we are liable to pay the stamp duty value, that amount we have to adopt. And value of the sale of what? Shares. Sir, you have to take the 1%. What is the sale value? 2 crore 50 lakhs. So 2 crore 50 lakhs into 1% comes to 2,50,000, which comes to total 1 crore 33 lakh 50,000 is the exempt turnover. So it comprises of what and all? RCM, sale of building, and sale of shares. For RCM, you have to take the RCM turnover. For sale of building, you have to take the stamp duty value. On 1 crore 25 lakhs only, they pay 2%, which comes to 2,50,000. Now for shares, we have to take the 1% of the sale consideration. Now I am going to calculate the what turnover? Total turnover. Total turnover is nothing but full turnover. You tell me, what is the outward supply of first item? 14 lakhs. For which item? M is 14 lakhs. Next N? 6 lakhs. Actually, that is liable to be paid tax on reverse charge. But value of inward supply on which tax is liable to be paid on RCM will be included as the turnover of the supplier and not the recipient. I am calculating for supplier. Right. Next one. O 10 lakhs. Super sir. O 10 lakhs. Is there any export? Yes sir. Export comes to M how much? 2,50,000. N how much? No, there is no export. Is there any export of O? Yes sir. How much? 10 lakh. 10 lakh is the export of O. Right. Then what is the any other turnover available? Consultancy services. Export of consultancy. How much? 20 lakhs. Again 20 lakh. Then now we have added whatever exempt turnover we have added. Is there any turnover? Sale of building? Yes sir. How much? 1 crore 25 lakh. That has to be included even in the total turnover also. Next one. Is there any other turnover? Sale of shares. What is the sale of shares? 2 lakh 50,000. Is there any other turnover? Outward supply? Is there any other outward supply? Interest. How much interest? 4 lakhs. So that also has to be added in the total turnover. There is no question of taxable exempted and all. Correct? Sir, but the numerator does not include the exempt turnover. Because as per 17 subsection 3, specifically it has been excluded. But in the total turnover you have to include. So you tell me what and all. Number one, first one, M outward supply, calculator 14 lakh plus N outward supply 6 lakh, O outward supply 10 lakh. Super. M export supply 2 lakh 50,000. N export 0. O export 10 lakhs. Total 42 lakhs as of now. Plus, sir, export of services 20 lakh. Plus sale of building 1 crore 25 lakhs. Plus, sir, what is the sale of shares? 2 lakh 50,000. Plus, what is the interest? 4 lakhs. So total comes to 1 crore 94 lakhs is the total turnover. Comfortable? So the common credit, total credit is 6 lakh 90. So 6 lakh 90,000 into 1 crore 33 lakh 50,000 divided by, sir, 1 crore 94 lakhs comes to, what is the share of exempt supply? 4 lakh 74,820. Now, sir, I am calculating the GST payable. Shall we? You tell me what is the ITC available in the electronic what ledger? Credit ledger. Common credit on input and input service is 6 lakh 90,000. Just now we calculated. Right, sir? Legal services used in manufacture of taxable product M. Sir, that we would have paid as what? ITC. Correct? That we have to pay as RCM. That can we claim it as what? ITC. So first we have to pay it as RCM. How much into how much? 3 lakh 50,000 into 18% comes to 63,000. So total ITC available in the electronic credit ledger will be 7 lakh 53,000. Because when I am purchasing the product, this 6 lakh 90,000 I would have paid. And for as RCM I would have paid 63,000. So total 7 lakh 53,000 is the amount. Comfortable? Less what? Common credit attributable to what supply? Exempt supply. We just now calculated 4 lakh 74,820 because that is the credit attributable to exempt supply that has to be put it on. So from 7 lakh 53,000, if you reduce 4 lakh 74,820, the net ITC available will be 2 lakh 78,180 is the net ITC available. What they want in the question, sir, with the help of above mentioned information, compute the net GST liability of Surana and Sons payable from electronic credit ledger or electronic cash ledger as the case may be for the what period? Man, tax period. So this is a very brilliant, outstanding question. In this question they are testing whether you know what is the value you have to adopt for sale of building. What value you should adopt? Stamp duty value. For interest in exempt supply, what value you should adopt? 0. In the total turnover, will you include this 4 lakh? Yes, sir. Sale of shares, what value you have to adopt? 1% of the. That's why when I read the question itself, I put what? Important point. Because sale of building valuation, whether you know or not, they are checking. Sir, sale of shares, whether you know or not, they are checking. Interest, you should know, it has to be excluded in the exempt supply and it has to be included in the total turnover. Legal services RCM you will pay and you can claim it as what? ITC. common input and input services. Total basically we have given 50 lakhs. So 50 lakhs into some amount. From that only we have apportioned, my dear lovable students. This 25 questions will give you a superb idea of the ITC for examination. Still you are having sufficient time to practice, to listen. There is no need to go and search what the computation is. That's what I'm explaining each and everything to you. After once you listen to that, take your paper, solve the question. You can solve at least 1 or 2 questions a day. If you solve 3 to 4 questions, then the level of confidence in GST will be very level, my dear lovable students. Sir, in the coming slot, you will be solving another 5 questions, which is from illustration 21 to illustration number 25. Because in ICAI, only 25 illustrations are there. All 25 will be solving. Sir, this 25 is a revision of the entire ITC at high level. Revise it very properly before you go to examination. If you are feeling this as, sir, if you are able to connect the provisions with it, share your happiness, my dear lovable students, and we'll meet you with another 5 questions. Till that, thank you. Bye-bye from me. Sir, very happy morning to all. So we are doing the workbook series of ITC. In that, we are doing the ICAI study material question. We are having 25 questions are there. We have done part 1 5 question, part 2 5 question, part 3 5 question, part 4 5 question. We are into the last 5 questions of the ITC. In that, illustration number 21 is the target now. Mrs. XYZ, a registered supplier, supply the following goods and services for construction of building and complexes. So for the purpose of construction, they are supplying both goods and services. Excavators for a required period at per hour rate. So they are supplying excavator. How they are charging the excavator? They are charging the excavator at per hour rate. Manpower for operation of excavator at a per day rate. For example, operators will be there. Whenever, sir, excavators are supplying, in order to operate that excavators, that machine, manpower is required. Soil testing and seismic evaluation at per sample rate. The another service what they are providing is soil testing services. The excavators are invariably hired out along with the operators. That means without operators they are not supplying the excavators. That means it's a composite supply. That means it's a whatever rate applicable to excavators will be the same rate applicable to manpower for operation of the excavators at a per day rate. Similarly, excavator operators are supplied only when the excavator is hired out. Same way, excavators operators, sir, are supplied only when the excavators are hired out. So machine they will give plus the operator also they will give. They will not give operator alone or machine alone. That means it's a composite supply. Mrs. XYZ receives the following services. Receives in the service means input services. For the services received only they will pay the GST. That only can be taken as ITC. Maintenance services for excavators, ITC is allowed. Health insurance services for operators of excavators, that's a blocked credit. We know that only if it is statutory obligation, health insurance and life insurance are allowed as ITC. Scientific and technical consultancy for soil testing and seismic evaluation, my dear lovable students, ITC are allowed. These two are allowed, this is blocked. For a given month, receipts exclusive of GST of Mrs. XYZ are as follows. Higher charges for excavators 18 lakh. So they got 18 lakh rupees higher charges by renting the excavator. So for this they are supposed to collect the output tax into whatever percentage applicable. Service charges for supply of manpower for operation of aircraft. Sir, for that general rate will not be applicable. The rate of higher charges for excavator itself will be applicable as per section 8 of the CGST Act. Tax rate for composite and mixed supply. This supply is a composite supply. Service charges for soil testing and seismic evaluation at 3 sites. This is an independent supply. So no need to apply the rate of higher charges for excavators. The independent tax rate for service charges will be applicable for this service. GST paid during the said month on service received by Mrs. XYZ Limited is as follows. Maintenance of excavator 1 lakh, ITC can be taken. Health insurance for excavator operator, ITC cannot be taken. Scientific and technical consultancy for soil testing and seismic evaluation, ITC can be taken. Compute the net GST payable by Mrs. XYZ from electronic cash ledger for the given month. Assume the rate of GST to be as under. Hiring out excavator 12%. Supply of manpower service and soil testing and seismic evaluation service 18%. But this will not be applicable, sir. But for soil testing and seismic evaluation 18% will be applicable. But for supply of manpower services 18 will not be applicable. 12 will be applicable. Ignore CGST, SGST, IGST for the sake of simplicity. Opening balance of ITC is of GST is also nil. Fantastic to the core. So, very simple man, computation of gross GST liability. Tell me what is the hiring charges of excavator, how much you collected? 18 lakh. What is the rate of GST? 12%. 18 lakhs into 12%. Take your calculator. 18 lakhs into 12% comes to 2,16,000 is the GST payable. Supply charges for supply of manpower for operation of aircraft. Actually, they collected 20,000. Sir, if they independently supply that service, the rate applicable will be 18%. But they are supplying along with the excavators. So, excavators rate will be applicable. 12% will be applicable. Comfortable, sir? So, you are supposed to collect 2,400. Whereas service charges for soil testing and seismic evaluation, that is not a composite supply, that is an individual supply. So that rate will be applicable. So 18%, 2,15,000 into 80%, the gross GST liability comes to 2,63,400. Fantastic to the core. Less ITC, they themselves given what is the GST paid, my dear lovable students. So computation of ITC available for set off. Maintenance service for excavator, ITC is available. Health insurance services, ITC is not available. Scientific and technical consultancy, ITC is available. Total ITC available comes to how much lakh? So the output tax collected is 2,63,400. Out of that, 2 lakh is the ITC. So net GST payable from electronic cash ledger comes to 63,000. Now read the notes. Since the excavators are invariably hired out along with operators, an excavator operator are supplied only when the excavator is hired out. It is a case of what supply? Composite supply. Under section 2 subsection 30, wherein the principal supply is the hiring out of the, as per section 8, that's enough. 8. The composite supply is treated as a supply of the what supply? Therefore, the supply of manpower for operation of aircraft, which is an ancillary supply, will also be taxed at the rate applicable for hiring out of the excavator. That is principal supply, which is at how much percentage? Comfortable? Whereas soil testing and seismic evaluation services, being independent of hiring out of excavator, will be taxed at the rate applicable to them, which is how much percentage? Come to the ITC notes. As per section 17, subsection 5, clause D, blocked credit on goods or services received by a taxable person for construction of what property? On his own account is blocked. Here, though the excavators are used for building project, same are not used by Mrs. XYZ on its what account? Actually, they are hiring out. They are hiring out to some other person for construction of immobile property. Instead, they are used for outward taxable supply of what? Of the machinery. Further, excavators are special purpose vehicle whose credit is not restricted under section 17 subsection 5 clause A, because excavators are not motor vehicle. Motor vehicle are only blocked. Look at the way in which they are thinking. What are the points they are connecting? First point they are connecting, saying that they are only renting the excavators. So they are not using the excavator for construction of their own building. If that is the case, ITC is blocked. Number 2, excavators are not motor vehicle as defined in section 17 subsection 5 clause A. It is a special purpose vehicle like truck. Truck is nowhere covered in the what credit? Blocked credit. Therefore, ITC on maintenance service for excavator shall be allowed. Therefore, maintenance service of excavator does not get covered by the bar section 17 at all. and the credit thereon will be same apply for scientific and technical consultancy for construction project, because in this case also service is used for providing the outward taxable supply of soil testing and what evaluation, and not for construction of what property, because only construction of immovable property is covered in the what credit. This is not construction of what property? Immovable property. Section 17 subsection 5 clause B allows input tax credit on health insurance only where an inward supply of such service is used by a what person for making an outward what supply of the same category of goods or services or both, or as an element of taxable what or what supply, or where it is obligatory for an employer to provide the same to its home under any law for the time being in force. In the given case, it is assumed that it is not obligatory for employer to provide health insurance to its employee under any law for the what being in force. Therefore, the credit thereon will not be. So, what is the one-line summary of the entire discussion of this question? This is a past examination question which is there in the ICAI study material. One assessee was supplying excavator. Whenever they supply excavator, they will supply the operator also. Because of that supply is become composite supply. So whatever rate applicable to the excavator supply will be applicable for the supply of the operator manpower also. Whereas there, in addition to that, they are doing soil testing and seismic evaluation as per the sample rate. That is an individual supply, neither composite supply nor mixed supply. It's an individual supply. Hence, individual supply rate will be applicable. Since excavators are neither motor vehicle, since excavators have not been used for the construction of the immovable property on account, it does not fall under the blocked credit. Hence, any GST paid for excavator or for repair and maintenance of excavator can we claim it as ITC. Whereas, sir, health insurance for operator of excavator, generally health insurance and sir, life insurance are blocked credit on face. But if that has been used for further supply, then that will be allowed if you are in a similar line of business which we have already discussed in the class. And if it is in a statutory obligation, that is allowed. But here, it is not covered in either of the exception. This health insurance service has not been used for further supply of health insurance, nor it is not a statutory obligation. Hence, ITC should be blocked. Whereas with regard to scientific and technical consultancy for soil testing and seismic evaluation, sir, we are using that ITC for providing taxable outward supply. Hence, my dear lovable students, ITC will be allowed. So, just we have to calculate the output tax collected minus we have to calculate the ITC. That's it with regard to illustration number 21. We are moving into illustration number 22. Sir, We Supply Private Limited is a registered manufacturer of auto parts in Kolkata, West Bengal. The company has a manufacturing facility registered under the Factories Act in Kolkata. So they are having, sir, Factories Act. Factories Act. Statutory obligation may reflect in the question. It procures its inputs indigenously from both registered and unregistered supplier located within as well as outside West Bengal, and also imports some raw material from China, right? So that means they are purchasing from registered person, they are purchasing from unregistered person, even they are importing from China also. Company report the following details for a tax period. Sales is just 15 lakh. So you can easily calculate the output tax liability. Raw material 3,50,000, consumable 1,25,000, transportation charges for bringing the raw material to factory, salary paid to employees on roll, this is schedule 3 item, premium paid on life insurance policy taken for specified employee, you have to check whether it is as per statutory obligation or not in the notes. Audit fee ITC allowed, telephone expense ITC allowed, bank charges ITC allowed. All the above amounts are exclusive of all kinds of taxes wherever applicable. However, the applicable tax has also been paid by the company, right? Further, following additional details are furnished by company in respect of payment and receipts reported by it. These are the additional notes, this many notes they have given, 9 to 10 notes. raw material amounting to 80,000 is procured from Bihar. First of all, where this guy is situated? West Bengal, Kolkata, West Bengal. So this is the place of residence, West Bengal, West Bengal. So total purchases is equal to, tell me what is the total purchases? Raw material 3.5 lakhs is the total purchases, 3,50,000. Sir, out of that, lot of split has been given. If you read that, raw material amounting to 80,000 is procured from Bihar. So from Bihar, they purchased to the extent of 80,000. Is Bihar an interstate supply or intrastate supply? Interstate supply, fine. And 1.5 lakhs is imported from China. From China, sir, they have imported 1,50,000. 1,50,000 has been imported. Sir, when they import, they paid basic custom duty of 15,000. So they have paid BCD of 15,000. We know that BCD should be added. It is not entitled for ITC. It should form part of the cost. For BCD and SWS, ITC is not eligible. And social welfare surcharge of 10% of 15,000, which comes to 1,500. Sir, add SWS, which comes to 1,500. And integrated tax, sir, 2,997 or 29,000. 29,970 is the IGST paid are imported in raw material. Sir, IGST comes to 29,970. Are you all really with me? As we all know that BCD cannot be taken as ITC, sir, SWS cannot be taken as ITC, whereas IGST can be taken as ITC, my dear lovable students. So when you are calculating ITC, don't leave that IGST part. Fine. Remaining raw material, the balance, is procured from supplier located in what Bengal? West Bengal. So remaining raw material means totally 3,50,000 minus 80,000 minus 1,50,000. What is the remaining raw material? 1,20,000 is the remaining raw material. This is a intrastate purchases. Sir, they are giving remaining raw material is procured from supplier located in West Bengal. Out of such raw material worth rupees 30,000 is procured from unregistered supplier. So this has to be classified into two categories, registered person and unregistered person. From unregistered person, they have purchased how much? 30,000. So from registered person, 1,20,000 minus 30,000 comes to 90,000. Comfortable, sir? Yes, sir. Is procured from unregistered supplier. The remaining raw material is procured from registered supplier. Further raw material worth rupees 5,000 purchased from registered supplier located in West Bengal has been destroyed due to seepage problem. Destroyed means it's blocked credit. So out of this 90,000, again classified into two categories, sir, destroyed and normal. Destroyed and normal. How much is destroyed? 5,000. So normal will be 90,000 minus 5,000 comes to 85,000. So this is the purchase chart. This is what they have given there. Fine. Sir, further raw material worth rupees 5,000 purchased from registered supplier located in West Bengal has been destroyed due to seepage problem in the factory and thus could not be used in the manufacturing process. Now they are having a separate note for consumable. That means we can finalize that all the things are related to only 3,50,000. No need of doubt that whether I have to add the what or not, consumables or not. Comfortable, sir? Now I am going to calculate the ITC for the raw material. You tell me computation of ITC available with V Supply Private Limited for the tax period. Opening balance of ITC, they themselves given in the question that this is the opening balance. CGST 15,000, SGST 8,000 and IGST 9,000 already given in the question. So CGST 15, SGST 8, IGST 9,000, total comes to 32,000. Sir, raw material, we have already taken the split. In that raw material purchased from Bihar. Sir, Bihar, how much is the raw material? 80,000. What is the GST rate they have given? CGST, SGST, IGST rate are 9, 9 and wherever applicable. You tell me if it is from Bihar, will it be 9, 9 or 18%? 18%. What is the value? 80,000 into 18% come to 14,400. So that is a split of this, which is 80,000 into 18%. Shall I proceed? So we have calculated this into 18%. Right. 14,400. Okay, fine. Come to the next one, man. From China, raw material, this we have done. Raw material imported from China. Sir, actually, we have paid BCD. Is it entitled for ITC? No, sir. We have paid SWS. Is it entitled for ITC? No, sir. We have paid IGST. It is entitled for what? ITC. So how much is the IGST you paid? 29,000. That is entitled for ITC. That's what 29,970 given in the question. Next one, raw material purchased from unregistered supplier within West Bengal. How much you supplied from unregistered person? 30,000. So since the suppliers are unregistered, they would have not collected what at all? GST at all. So there is no question of ITC at all. That's why it is nil. Shall I proceed? Raw material destroyed due to sweepage. Sir, I would have paid GST, but that cannot be claimed as ITC because it's a blocked credit. Remaining raw material purchased from West Bengal. The remaining raw material balance is how much? 85,000. It is from West Bengal. It's a dash state supply. So 85,000 into 9%. So 85,000 into 9% come to 7,650. And again 85,000 into 9% comes to 7,650. This is what CGST and SGST. 7,650 and 7,650. Total comes to 15,300. Comfortable? Comfortable? So total opening, sir, total ITC for raw material is 7,650 for CGST. For SGST 7,650. IGST is, sir, 14,400 plus 29,970 come to 44,000 what? 430. Total comes to 59,670. In this opening balance has not been added. Comfortable? Fine, sir. Now coming to the next note, one by one. This is what here mentioned as note number 1. Credit of input tax, CGST and SGST or IGST paid on raw material used in the course or furtherance of business is available in terms of section 16 subsection 1. If any raw material has been used for the purpose of business or profession, ITC is allowed. IGST paid on imported goods qualify as input tax in terms of section 2 subsection 62A. Therefore, credit of IGST paid on imported material used in the course or furtherance of business is available in terms of section 16 subsection. Tax on intra-state procurement made by registered person from an unregistered supplier is levied only on a notified category of what or what. ITC is not available on destroyed input. It is blocked as per section 17 subsection 5. Comfortable, sir? Coming to the next second note. So we have done with the raw material note. Done. Raw material completed. Consumable. Consumables are procured from registered supplier located in where? Kolkata. And include diesel, HP man, diesel. Sir, it is not leviable to what? GST. Worth rupees 25,000 for running the generator in the factory. So what is the total consumable? 1,25,000. Out of 1,25,000, 25,000 is diesel. For that, what itself is not there. So consumables, the second working note, consumables classified into two categories, my dear lovable students. Number 1, diesel other than diesel. Diesel other than diesel. How much is for diesel? 25,000. How much is for other than diesel? 1 lakh. 1 lakh is for other than diesel. So for this other than diesel, we would have paid what? GST. Since we have paid GST, sir, these are purchased from Kolkata itself. Where we are situating? Kolkata. So it's a dash state supply. So we would have paid CGST and SGST. So 1 lakh into how much percent? 9%. Comes to 9,000. 9,000 is allowed. 18,000 is totally allowed. That's what they have mentioned in note number 2. Consumable being input used in the course or furtherance of business. Input tax credit is available on the same in terms of 16 subsection 1. However, levy of CGST on diesel has been deferred till such date as may be notified by the government on the recommendation of the council as per section 9.2. Here you should be able to recall 9.1, 9.2, 9.3, 9.4, 9.5. I can bet you Every one of my students will be able to recall this. There is no doubt about it. Hence, there being no levy of GST on diesel, there cannot be any what? ITC. Since we have not paid any GST on diesel, there is no question of what at all? ITC at all. Coming to the third point, man. What's the third point? Transportation charges comprises of 60,000 paid to GTA in Kolkata and 10,000 paid to horse-pulled carts. Horse-pulled carts are not GTA. Services provided by way of transportation of goods by road. These horse-pulled carts are services provided by road. It is exempt from GST. Sir, GST applicable on the service of GTA is 5% payable under what charge? Reverse charge. So totally, what is the transportation charges? 70,000. So GTA services, the next working note, GTA services classified into two category. Number one, 70,000 and total 70,000, no? So 60,000 and 10,000. 60,000 and 10,000. 10,000 is horse-pull cart. Sir, this is exempted under section 11. Whereas, this is in a GST at what CM? RCM. Fine. So, what they are trying to say with regard to GTA? Sir, transportation charges for bringing the raw material to factory, 60,000 into, it's a intra-state supply or interstate supply? Intra-state supply. Because question specifically said that it is at Kolkata. So, into 60,000 9% comes to, sorry, 2.5%. 60,000 to 2.5% comes to 1,500 CGST and 1,500 SGST. Totally 3,000. My dear lovable students, this notes plays a major role. GST is payable under reverse charge on transportation service received from GTA. Tax payable under 9(3) of the CGST or SGST Act qualifies as input tax in terms of Class B and Class D of Section 2, subsection 62. Let it be there. This input tax paid under reverse charge on GTA service will be available as ITC in terms of Section 16, subsection 1 as a said service is used in the course of furtherance of business. Furthermore, intra-state service by way of transportation of goods by road except the service of GTA and courier agency are what? Exempted from CGST by notification number something bar something. Therefore, since no GST is paid on such services, there cannot be any ITC on such services. My dear lovable students, we have studied this exemption when we studied G stands for goods. Transportation of goods by road. Except this below cart will go in road. That is exempt from GST. Sir, since it is exempt from GST, there is no question of FCM or RCM as the case may be. I am moving further to the next point. Life insurance policies for specified employee have been taken by the company to fulfill a statutory obligation in this regard. Then ITC is allowed. The life insurance service provider is registered in West Bengal. So they are also situated in West Bengal. They provide service to a registered person. Then location of such person will be the place of supply. So if both the service provider and the place of supply are situated in same state, then it will be treated as intra-state supply. Then they would have collected CGST and SGST to say that only this much link we need. So premium is 1,60,000. So 1,60,000 into 9% comes to 14,400 is the premium paid on life insurance policy. So 14,400 and 14,400 total 28,800 is allowed, my dear lovable students. I am moving into point number 5, note number 5. ITC on supply of life insurance service is not blocked if it is obligatory for an employer to provide such service to its employees under any law for the what being in force, time being in force. Right? Change. Proviso to 17 subsection 5 clause B. Therefore, GST paid on premium of life insurance policy will be available as ITC in terms of 16 subsection 1 as a said service is used in the course of furtherance of business. Coming to the next one. Next point number 5. Audit fees paid to Mrs. Goyal and Co., a firm of chartered accountant registered in West Bengal. For the statutory audit of the preceding financial year, ITC is allowed because it is in the Sir, that Goyal is also situated in what Bengal? So they would have charged what and what? What is the amount of audit fee? 50,000. So 50,000 into 9% comes to 4,500 and 4,500. Total 9,000 rupees. You can take it as ITC. With regard to audit fee, this is the note. Audit fee, telephone expense and bank charge, all are service used in the course or furtherance of what? Business. Thus, credit of input tax paid on such service will be available in terms of 16 subsection 1. Fantastic, sir. Telephone expense pertaining to bill for landline, phone installed at the factory. So, landline means billing address will be the checkpoint. Correct? Postpaid, sir, prepaid, landline. Landline means where the telecommunication line is what? Installed. At the factory, and mobile phone gives to employees for what use? Official use. The telecom service provider is registered in what? Bengal. So both are in West Bengal. So even for telephone expenses, they would have collected what? CGST and SGST. So 30,000 into 9% comes to 2,700. 2,700 total comes to 5,000. Comfortable, sir. Next one, the bank charges are towards company's current account maintained with the private sector bank, registered again in what? Bengal. So the bank, on that bank charges of 10,000, they would have collected what? 9% CGST, 9% SGST. So 900 and 900, total 1,800. So if you add, sir, you will get the total ITC for the what period? Tax period, including the raw material. Sir, one thing you should specifically understand here, there is salary paid to employees on rolls. How much? 5 lakhs. That is neither supply of goods nor supply of services, covered in Schedule 3. If you look here, sir, this note, I missed to read it, that's why I am reading now. Service by employees to employer in the course of or in relation to his employment is not a supply in terms of section 7, read with para 1 of what 3 to the CGST Act. Therefore, since no GST is paid on such service, there cannot be any ITC on such services. Done, man. We are done with the total ITC available. Total 55,650, 48,650, 53,370, total 1,57,670. I hope that you are able to appreciate or understand what I am talking to you. Now, I have read all the notes. Breakup of the sales is as under. Coming to the sales part, we have done with the expenses part. Sales in West Bengal, how much lakh? 7 lakh for the CGST and sales in state other than West Bengal. For this, we have to collect the export under LUT. Output tax will not come because there are two options for export. Number one, by making payment of IGST or bond or LUT. They adopted bond or LUT, which is the second option. So, it is a zero rated supply. Output tax liability will not come. Opening balance of ITC we have already taken into account. Total ITC available with we supply private limited for the tax period. They want the ITC as separate. We have calculated that. Net GST payable from electronic cash ledger. That's what we are calculating. So we are going to calculate the computation of what GST payable, net GST payable. On intra-state sales within West Bengal, sir, what is the value given in the question? 7 lakhs. 7 lakhs into how much percent? 9%. 63,000 CGST, 63,000 SGST and 1,26,000 total. On interstate sales other than West Bengal, what is the value? 3 lakh into 18% comes to 54,000 IGST, total 54,000. On export under bond or LUT, nothing will come because that is a way of export without payment of taxes. Total output tax liability 63,000 CGST, 63,000 SGST, 54,000 IGST, total comes to 1,80,000. Less ITC available for set off. That is what we have already calculated. 55,650, 48,650, 53,370, 1,57,670 total. Then you will get the net GST payable from electronic what ledger. From 63,000, if you reduce 55,650, you will get 7,350, 14,350, 630 and 22,000 what? 330. You have to check, is there any GST to be paid on what charge basis? That has to be added to the output tax liability. GST payable on inward supply of GTA service under what charge? This has to be paid through electronic what ledger itself. So 1,500, 1,500 and dash, total 3,000. So the net GST payable will be 8,850, 15,850, 630 and 25,330. My dear lovable students, I am reading the sales related notes. Export of goods is a what rate supply? In terms of section 16 subsection 1 clause A of the VAT Act, zero rated supply under LUT is made without payment of VAT tax. As per section 16 subsection 3 clause A of the VAT Act, since export of goods is a VAT rated supply, there will not be no apportionment of VAT. And full credit will be available as per section 16 of the IGST Act read with section 17 subsection 2 of the CGST Act, because we all know that even though the export are exempted, still ITC is available. So there is no need to use the concept of apportionment as per section 17. What you are supposed to mention, what you are supposed to note here is, look at how much other points they are connecting. For an explanation, you would have never thought that concept of apportionment will be applicable. But in our answer professionally, we have to write that since exports are zero rated, as per section 16, full ITC is available. Hence, the concept of apportionment will not be applicable. As per section 49, subsection 5, read with rule number 88A, ITC of IGST is utilized towards payment of IGST first, and CGST and SGST in any proportion and in any order. They have written the manner of utilizing the ITC. CGST is utilized towards payment of CGST and IGST in that order. ITC of CGST shall be utilized only after ITC of IGST has been utilized fully. That means the credit of IGST should be exhausted. SGST is utilized towards payment of SGST and IGST in that order. ITC of SGST shall be utilized only after ITC of IGST has been utilized fully. Section 49 subsection 4 lay down that amount available in the electronic credit ledger may be used for making payment towards what tax? However, tax payable under reverse charge is not an output tax in terms of section 2 subsection 82. Therefore, tax payable under reverse charge cannot be set off against the ITC and thus will have to be paid in CGST and SGST are chargeable on intrastate inward and outward supply, and IGST is chargeable on interstate inward and outward supply. I believe that you are able to appreciate or understand every notes and every working of this question, because they want total ITC available with We Supply Private Limited for the tax period that we have done, and net GST payable, which is CGST, SGST or IGST as the what may be, from electronic cash ledger by We Supply Private Limited for the tax period. That means out of 5 questions, my dear lovable students, sir, we have done the 2 questions. Sir, we are going to solve question number 3, which is illustration number 23. Our target is 2 by 5. So we are moving into question number 23, my dear lovable students. ABC Company Limited of Bangalore is a manufacturer and registered supplier of machineries. It has provided the following details for a tax period. Health insurance of factory employee as required by the Factories Act. Factories Act is a statutory, so ITC will be raw material for which invoice has been received and GST has also been paid for full amount, but only 50% of the material has been received. Remaining 50% will be received in next month. If the goods are received in lot or installment, ITC can be availed only on the last lot or installment. Works contract service used for installation of plant and machinery. Plant and machinery is allowed. It's not a blocked credit. Purchase of manufacturing machine sent directly to job work premises under delivery challan, principal can take ITC. They are explaining section 19 ITC and job work provision read with section 143. Purchase of car used by director exclusively for business meeting is blocked credit. Motor vehicles are blocked credit. Outdoor catering service available for business meetings are blocked credit. You can't take it as ITC. When you read all these points, generally normally happiness should come, because I am able to appreciate or understand everything. ABC Company Limited also provides service of hiring of machine along with manpower. We have already done one question. Illustration number 21, excavator question, same point they have what cut paste. For operation, as per trade practice, machines are always hired out along with operators, and also operators are supplied only when machines are hired out. That means things started repeating. Adjustment started repeating in examination. When you complete the workbook, I can guarantee you that your examination will be a cakewalk. Outward supply exclusive of GST for tax period are as follows. Hiring receipt for machine 5,25,000. For that 12% GST will be applicable. Service charges for supply of manpower, sir, since it is a composite supply, even for that also 12% will be applicable, 18% will not be. Assume the rate of GST to be as under service of hiring of machine 12%. Supply of manpower operator service 18%. Ignore CGST, SGST or IGST for the sake of simplicity. Compute the amount of ITC available as also make GST payable from the electronic cash ledger for the tax period by giving necessary explanation for treatment of various items. Opening balance of ITC is nil. So when you read this question, your confidence should be more. If yes, sir, put as comment that you are able to appreciate or understand. I am moving into the answer part. Computation of ITC available, my dear lovable students. ITC available. Health insurance of factory employee. GST allowed, not allowed? Allowed. ITC of health insurance is available in the given case in terms of proviso to 17 subsection 5 clause B, since it is obligatory for the employer to provide health insurance to its employees under the what act? Factories Act. Raw material received in factory, sir, if the goods are received in lot or installment, ITC will be available only in the receipt of last. Where the goods against an invoice are received in lot or installment, ITC is allowed upon receipt of last lot or installment, void first proviso to section 16 subsection 2. Therefore, ABC Company Limited will be entitled to ITC of raw material on receipt of second installment in the what month? Next. For that, we are not saying that ITC cannot taken at all. We can take the ITC, but not in the current month, but in the works contractors service used for installation of what? Plant and machinery. Since it is for plant and machinery, ITC is allowed. Sir, section 17 subsection 5 clause C provides that ITC on works contract service is what? Blocked when supplied for construction of what property? Other than plant and machinery, except when same is used for further supply of such what contract. Though in this case the works contract service is not used for supply of what contract service, ITC thereon will be allowed since such service are being used for installation of what? Plant and machinery. Fantastic to the core. Manufacturing machinery directly sent to job work premise under Challan, ITC will be? Sir, ITC on capital goods directly sent to job worker premise under Challan is allowed in terms of section 19 subsection 5 read with rule number 45. Rule 45 Challan we already discussed. Purchase of car used by director for business meetings only, it is what credit? Section 17 subsection 5 clause A provides that motor vehicle for transportation of persons having approved seating capacity of not more than, including the driver, except when they are used for making taxable supply of, further supply of such vehicle, transportation of passengers, imparting training on driving, flying and navigating such. Since ABC Company Limited is a supplier of machine and it does not use the car for transportation of passenger or any other use as specified, ITC thereon will not be available. Outdoor catering service available for business meeting are section 17 subsection 5 clause B provides that ITC on outdoor catering is blocked except where same is used for making further supply of outdoor catering or as an element of taxable composite or mixed supply. So since ABC Limited, Company Limited is a supplier of machine, ITC thereon will not be available. Are you really with me? So the total ITC available will be how much? 82,000. Now computation of gross GST liability. Hiring receipt for machine total 5,25,000 you received. Sir, we will be collecting 12%, total 63,000. Service charges for supply of manpower 2,35,000 at the rate of 12% is 28,000. Total comes to 91,000. Sir, since the machine is always hired out along with operators and operators are supplied only when the machines are hired out, it is a case of what supply? Wherein the principal supply is hiring out of what? Machine. Therefore, service of supply of manpower operator will also be taxed at the rate applicable for hiring out of machine. Principal supply which is 12% in terms of section what? 8A. So shall we knock off the output tax collected against the ITC? Gross GST liability is 91,000. Less input tax credit is total input tax credit is 80. So you will get the net GST payable from electronic cash ledger comes to 9,200. Look at the comfortness what we are having in computation of GST payable and ITC, my dear lovable students. What you are supposed to do is take pen, paper, do at least 1 or 2 questions daily for your practice. Then this is a subject where if you work really hard, sir, which will be there in the question paper. The similar type of question will be there in the question paper. This 25 questions will change your life. ITC part. Because once you are done with ITC, computation of GST payable, first 14-mark question will be a cakewalk for you, my dear lovable students. That's why I am doing ITC part first. So, some of the question, you take the pen, take the paper, try to do at least 2 to 3 questions a day. That mathematical. Then the level of control what you are getting will be very level. So, out of 5 questions, we have done 3 questions. Sir, we are having only 2 questions pending. Illustration number 24 and 25. We are moving into illustration number 24. So, we have done question number 3 of 5 questions, my dear lovable students. Shall we move into question number 4?
Yes, sir.
Pari Limited of Jodhpur, Rajasthan is a registered manufacturer of cosmetic products. Pari Limited has furnishes the following details for a tax period, particular tax period. Details of outward supply. Supplies in Rajasthan 8,75,000. That is intra-state supply. CGST and SGST has to be collected. Supplies in state other than Rajasthan, IGST has to be collected because it's a interstate supply. Export under LUT, output tax will not come. Whatever ITC you are having, 100% can be claimed because it's a zero rated supply. There is no need of apportionment. Details of expenses. You have to say out of these expenses whether the expenses are blocked credit or not. Raw material purchased from registered supplier located in Rajasthan. It's a intra-state supply. We would have paid CGST and raw material purchased from unregistered supplier located in Rajasthan. We would have not paid anything because supplier is a unregistered person. So nothing has to be taken for ITC. Raw material purchased from Punjab is a interstate supply. We would have paid IGST has to be exhausted first. Integrated tax paid on raw material imported from USA 22,732. ITC is available. Actually, they have not given BCD, basic custom duty, and SWS. That portion they have skipped. They have given only the IGST. The similar adjustment we have done in the earlier question. Consumable purchase from a registered supplier located in Rajasthan, including high-speed diesel, excise and VAT paid, valuing rupees 31,250 for running the machinery in the factory. So from the 1,56,250, you have to reduce 31,000. Whatever balance available can be taken as ITC. Monthly rent for the factory building to the owner in Rajasthan, ITC is available. Salary paid to employee on rolls, Schedule 3, neither supply of goods nor supply of services. Premium paid on life insurance policy taken for specified employees. Life insurance policies for specified employees have been taken by Pari Limited to fulfill a statutory obligation in this regard. The life insurance service provider is registered in Rajasthan. So ITC is available. The service provider would have collected CGST and SGST. All the above amounts are exclusive of all kinds of taxes wherever applicable. However, applicable taxes has also been paid by Pari Puri Limited. Opening balance of ITC with the Pari Puri for the given tax period. Opening balance has been given. CGST 20,000, SGST 15,000, IGST 15,000. To this, whatever eligible ITC has to be added. Assume CGST, SGST and IGST rate are 9, 9 and 18% respectively wherever applicable. Assuming that all other necessary conditions to avail the ITC has been complied by Pari Puri Limited wherever applicable. Compute the following. ITC available with Pari Limited for the tax period. Very easy, normal part. Net GST payable, CGST, SGST, IGST as the case may be from electronic cash ledger by Pari Limited for the tax period. Pakka? Very normal question. Because those who have gone through the 23 questions, 24 will be a cakewalk. Not only 24, now you fall into the method of doing the questions. So if you revise this 25 question itself is more than enough for examination, my dear lovable students. From ITC part I am saying. Computation of ITC available with PARI Limited. For raw material purchased from local registered supplier. Sir, the value they have given as 1,06,250 into how much percentage? 9%. Always in examination you have to check whether this amount is value or the tax amount. What is given in the question? This is value or tax amount? Value. So on that you have to apply the tax rate. So 1,06,250 into 9% of CGST, 9562.50, 9562.50 of SGST. Comfortable?
Yes,
Purchase from local unregistered supplier, we would have not paid any GST. So there is no question of what at all, ITC at all. That's why nil. Purchase from Punjab, sir, from registered supplier, he would have collected what? IGST. What is the value? 1 lakh. 1 lakh into 18% comes to
18,000.
raw material imported from USA. We all know that IGST is entitled for ITC. IGST paid is straight away given in the question, which is 22,000. Out of consumable, sir, HP man is there. We have to remove the HP man, because for HP man we would have not paid what? GST. We would have paid VAT or central excise. That is not allowed as ITC. So from 1,56,250, if you reduce the value of 31,250, you will be getting a value of 1,25,000 into 9% of CGST, 11,250, and 9% of SGST, 11,250. This is the GST amount you have paid. This is entitled for what?
ITC.
Monthly rent for factory building to the owner in Rajasthan. What is the value of rent you have paid? 1 lakh into 9% of CGST and 9% of SGST, and salary paid to employees on roll. It is neither supply of goods nor supply of services. It is covered in Schedule 3. So no GST will be leviable. Fantastic to the core. Premium paid on life insurance policy taken for specified employee. They specifically mention that it is as per the statutory obligation. Since it is as per the statutory obligation, my dear lovable students, 2 lakh into 9% comes to 18,000 and 18,000. So the total ITC available on purchases is this much. To that value, add opening balance of ITC. You will get the total ITC available. Comfortable, sir?
Yes, sir.
This is a total ITC available. Sir, why I am writing that separate? Because compute the following. ITC available with PARI Limited for the tax period. They want that answer separately. That's why I am calculating that part separately. Then I am calculating net what payable? GST payable. Net GST payable is nothing but output tax collected minus the eligible ITC. We already finalized the eligible ITC, correct? So computation of net what payable? GST payable, right? So what is the intra-state supply value? What is the intra-state supply value? 8,75,000 into 9% of CGST. How much? 78,750 and 78,750 SGST. There is no IGST, right? I will tell you, don't worry. Interstate supply, sir, we will be collecting what? IGST. What is the value? 3,75,000 into comes to 67,500. Export under LUT? Zero rated. So 0, right? What is the total output tax liability? 78,750, 78,750, 67,500. Less the total ITC available, including the opening ITC, 67,812, 67,812, 55,732. Right? You will get the net GST payable 10,938, 15,938, 11,768. Comfortable, sir?
Yes, sir.
The same has been written as story. Sir, note number 1. Credit of input tax, CGST and SGST or IGST paid on raw material used in the course or furtherance of business is available in terms of section what?
16.
tax on procurement made by a registered person from an unregistered supplier is leviable only in case of notified what or what? In terms of section 9 subsection 4, they are linking RCM. If a registered person has purchased from an unregistered person, if the supplier is an unregistered person, recipient is a registered person, and supply is a notified supply, which is nothing but only for the builder, promoter, builder, that is cement, other than cement, only that item is covered as notified item, but this is not a, so the implications of 9.4 will not be that you write to show the examiner that I have studied 9.4. Therefore, since no GST is paid on such raw material, that does not arise any question of ITC on such vendor material. IGST paid on imported goods qualify as input tax in terms of section 2 subsection 62. Therefore, credit of IGST paid on imported raw material used in the course of furtherance of business is available in terms of section what? ITC on consumable being input used in the course or what of business is. However, since levy of GST on high-speed diesel has been deferred till a date to be notified by the government, so there cannot be any ITC of the ITC on monthly rent is available as a said service is used in the course or service by employees to the employer in the course of or in relation to his employment is not a supply in terms of section 7 read with what 3 to the CGST Act. Therefore, since no GST is paid on such service, there cannot be any ITC on life insurance service is available if the same is obligatory for an employer to provide to its employees under any law for the as proviso to 17 subsection 5 export of goods is a what rated supply as per section 16 subsection 1 clause A of the What Act. A zero rated supply under LUT or bond is made without payment of what? In terms of section 16 subsection 3 clause A. That's why when you are calculating the output tax collected, we have not calculated anything because you have exported through bond or output tax will not come, but whatever ITC is there 100% can be claimed it as, since export of goods is a what rated supply, there will not be no apportionment of ITC and full credit will be available as per 17 subsection 2. Comfortable? So I hope that by this stage you will be able to appreciate or understand every question, every part points of the question in illustration number 24. The last one, sir, 5 by 5 illustration number 25 is the target. Right. So we have done 24 question. We have to the last question, man. 25 out of 25. Flocham Palanpur, Gujarat has entered into a contract with our refinery, Abu Road, Rajasthan on 1st July to supply 10 valves on FOR basis. Valve. 10 valve. The following information is provided in this regard. First of all, my question to you, is this intra-state supply or interstate supply? One is in Gujarat, other in Rajasthan. Interstate supply. So what has to be collected? List price per valve is 1 lakh exclusive of taxes. So 1 lakh into 10 comes to is the value of supply. One of the conditions of the contract is that Flocham should ensure a 2-stage third-party inspection for the valves during the manufacturing process. Cost of 2-stage inspection is rupees 15,000 for how many valve? That means just 1,500 per valve. Is directly paid by our refinery to testing agency. Any amount incurred by the recipient on behalf of the should be included in the value of supply. So this has to be added. Basically a value of supply question. Our refinery requires special packing for the valves. Cost of special packing is 10,000 for how many valves? This is an incidental expenses. Primary, sir, and secondary packing should be included in the. So this has to be. Flocham arranges for erection and testing of valve supplied by it at our refinery site. Cost of erection is 15,000 for 10 valve. Till they supply, this is an incidental expenses. So it has to be included in the. Goods are dispatched with tax invoice on 20th July and they reach the destination at Abu Road on 21st July. Lorry freight of 5,000 has been paid by our refinery directly to the lorry driver. Any amount incurred by the recipient on behalf of the should be included in the assume CGST and SGST rate to be 9% each and IGST rate to be 18%. Opening balance of ITC of IGST is nil, CGST is 20,000, SGST is 20,000. All the given amount are exclusive of GST wherever. Flotsam has also undertaken following local transaction during the month of July, which it had paid, sir, CGST and SGST as under, since it is local, CGST and SGST. So that means the question is not over, still expenses paid details are there. Availed service of works contract to erect foundation for fixing the machinery to earth in the factory. ITC available because this is relating to plant and machinery, there is no problem. Laid pipeline from the water source outside the factory, this has been highlighted in the class. If the pipeline is situated outside the factory, it is what? Blocked credit. Up to the gate of the factory for the purpose of production facility. Look at the wordings of the question. Sir, it is up to the gate of the factory, hence it is what? Blocked. Because it is fully
outside the
factory. Especially the definition will say that, sir, outside the factory is blocked. For the purpose of smooth and convenient mobile communication in its factory, it has installed telecommunication tower of a mobile company with due permission. Sir, it's blocked. Telecommunication towers are blocked. Even though it is installed, it has entered into an agreement with a travel company to provide home travel facility to its employees when they are on leave. Basically, leave travel concession or leave travel assistance are blocked. But if it has been provided on a statutory obligation, allowed. It has entered into an agreement with a fitness center to provide wellness service to its employees after office hours. It is what? Blocked. But if it is as per, work out the net GST, CGST, SGST, IGST as the what may be. Payable from electronic cash ledger of Flotsam, Palanpur, Gujarat for the month of July after making suitable assumptions, if any. It's a straightforward normal question. I think that you will be able to appreciate and understand everything. So I am going to calculate the output tax liability of Flotsam. Number one, list price of 10 wall. What is the value of 1 wall? 1 lakh into 10 comes to
10 lakhs.
Add amount paid by R refinery to testing agency as per note number 1. As per 15 subsection 2, any amount that the supplier is liable to pay in relation to supply, but which has been incurred by the what? Recipient of the supply and not included in the price actually what or what? For the goods shall be included in the. Since in the given case arranging inspection was liability of the same should be included in the value of supply charges for the same. However, have been paid directly to third party service provider by the recipient. Therefore, the value shall be included in the. So this has to be added 15,000. Add what packing?
Special packing.
Sir, as per 15 subsection 2 inclusions, I hope that ICAI you are remembering. Any amount charges for anything done by supplier in respect of supply of goods at the time of or before delivery of goods shall be included in the value of supply. So this 10,000 has to be included in the value of supply. Add erection and testing charges at site. Again, same note number 2 will be applicable. It's an incidental expenses. It has to be included. Add freight. Note number 3. As per 15 subsection 2, any amount that the supplier is liable to pay in relation to a supply, but which has been incurred by recipient of supply and not included in the price actually paid or payable for the goods shall be included in the. Since in the given case, the supply contract is on what basis? Payment of freight is the liability of the supplier because it's like free, sir, till I will reach you to your doors. So, the supplier is the person who are supposed to take the responsibility, but the same has been paid by the recipient and the should be included in the value of supply. Coming here, sir, what is the value of taxable supply? 10,45,000. On this 18% IGST has to be collected because we already said that it's an interstate supply. So 1,88,100 is the output tax collected, right? Less eligible ITC. We have to check what are the ITC eligible, my dear lovable students. For that, we have to prepare a table. Computation of ITC available with Flotsam for the month of July. Opening ITC, they themselves given in the question CGST 20,000 and SGST 20,000. Works contract service availed for erecting foundation for fixing the machinery is allowed or blocked? Allowed. Laying of pipeline up to the gate of factory, it is outside the factory gate, it is blocked. Installation of telecommunication tower is blocked. Service of travel company, leave travel concession or leave travel assistance is blocked. Fitness center gym is blocked. So including opening 25,000 and 25,000 is only allowed. So as per section 17 subsection 5, ITC on works contract service when supplied for construction of immobile property other than what? Except where it is an input service for further supply of works contract service is blocked. Further plant and machinery include foundation and structural support used to fix the what to earth as per 17 subsection 5. ITC on goods and service received by a taxable person for construction of immobile property other than what or what? On his own account, including when such and our services are used in the course or furtherance of business is blocked. Our plant and machinery excludes pipeline laid outside the factory premises and whether that telecommunication towers are inside the factory or outside the factory, you are not entitled to take. As per 17 subsection 5, ITC on travel benefit extend to employee on home travel concession and membership of health and fitness center is blocked unless it is obligatory for an employer to provide the same to its employees under any law for the time being in. So the total ITC available will be 20. So against the output tax liability IGST, you are having credit of CGST. Is CGST credit can be set off against IGST payable?
Yes, sir.
Yes, sir. 25,000. Can SGST credit can be set off against IGST payable?
Yes, sir.
But before you touch the SGST credit, CGST credit should be 100% utilized, right? So ITC of SGST has been utilized only after ITC of what? CGST has been utilized fully. In terms of proviso to 49 subsection 5 clause C, we would have heard only about IGST should be exhausted, IGST should be exhausted, IGST should be exhausted, not only IGST. If IGST exhausted only, I can touch the CGST. If CGST exhausted only, I can touch the SGST. So the net GST payable, sir, through electronic cash ledger is 1,38,000 and this is what the amount you are supposed to be paid, my dear lovable students, sir, through electronic what ledger. With this, officially we can declare that out of 25 ICAI question, my dear lovable students, we have completed all the 25 questions. And for your reference, I have added RTP and MTP question in set number N. And if you want, you can go through the past examination model question, which I have added as set number M. If you do this, you will be having 1,000% control in the computation of GST payable, which is going to come in the question number 1. I believe that the workbook series you are enjoying. If yes, update your happiness. We'll meet at the appropriate time. Thank you. Bye-bye from ANM.